Ladies and gentlemen, our program is about to begin. Please take your seats. Ladies and gentlemen, please welcome the Vice President of Research for BI Intelligence, Barbara Pang.
Hi, welcome to the final day of Ignition. I'm Barbara Pang and I'm going to be your host this morning. I lead research at BI Intelligence, Business Insider's Research and Analysis Division, covering all things in digital disruption. Up first today, platforms have become enormously powerful in the world of media. We have three top analysts who are going to walk through what to expect from Google, Facebook, and Apple in 2017. But first, please welcome Jeff Ramsey from eMarketer, BI Intelligence's sister research company.
Hello, everybody. We have a very, very special program now. I understand this is at least the second year that we've done this. It's basically going to be like this. I'm going to do a kind of a brief preamble to this and kind of set the stage for these three gentlemen here who are then going to walk us through the platform wars. And then we're going to, each of them are going to talk for 10 minutes, and then we're going to have a very stimulating Q&A. So this is about the War of the Worlds, but unlike Orson Welles' scenario that played back many, many decades ago, this is the real deal. This is what's really actually happening out there. I'm going to now give you a quick kind of glimpse into the big picture of things and pose an interesting question, which are Google, Facebook, and Apple essentially the robber barons of the media age? In other words, are they enjoying the spoils of the entire digital advertising market or media market while the rest of us as publishers are scrimping for the scraps that remain? Then if we take a step back and we look historically, it's interesting to see, this is from The Economist, if you look at the share of the GDP that is enjoyed by the top 100 companies in America. You see that in 1994, before the internet or digital revolution, they owned 33% of the GDP. And if we fast forward to 2013, we see that it's almost half at 46%, and by now it may well be half. So that's kind of an interesting backdrop. Then if you look at the top 10 companies in terms of market capitalization, we find that no less than six of them are tech or digital companies, and 3 of them are the companies that we're going to be talking about today. And it gets more interesting because, of course, these companies, which have huge market concentration, and as we look at the proliferation of devices, there's currently about 14 billion devices that are connected to the internet today. That's almost 2 for every person on the planet. Those 3 companies, or the digital companies in general, their market concentration increases because they own the networks that control those devices. So it becomes even more scary as we look forward. And if we look ahead to just 2020 and see how many digitally connected devices there are. Actually, at eMarketer, we've been trying to ascertain what the true number is for 2020. So we've looked at a number of different numbers. There's a low number from Gartner at 20 billion. There's a number of research companies and analyst firms that are coming out with numbers in the 30 to 50 billion range. And then we have this one from future market insights at 193.9. Think about that for a second. The specificity of that number, 193.9 billion, which reminds me of a very famous mathematician, John von Neumann, who said, there's no sense in being precise when you don't even know what you're talking about. And that's a humbling thing for all of us analysts up here on stage. So if we take out the high flyer, the 193.9 billion, and we take out the low flyer, and you kind of do a mishmash, basically we're talking about 35 billion devices in 2020, and that will put more market power into the hands of Facebook, Google, and Apple. So if we look at the hardware market, just as a quick scenario here for US smartphone users, together Android or Google and iOS own 95% of the market. After that, it's Microsoft, and I can't read that one, sorry, what does it say? Oh yeah, sorry, BlackBerry at 0.8%. Sorry about that, I hope nobody has a BlackBerry in here. Now let's look at the advertising dollars. You know, I think this was brought up several times over the last few days, including Henry Blodgett's introduction to this, looking at the ad market concentration. First of all, looking at the big picture of media ad spending in the United States, we know that newspapers and magazines continue to decline, not as precipitously as they did about a decade ago, but they're still on the decline. Television is still eking out some growth, and it's about a $71 billion market or industry. But then this year, for the very first time, eMarketers forecasters predict that digital ad spending in total will eclipse 72 billion, and of course that's driven with 20% growth rate overall for digital. It's a factor of mobile, which is $46 billion, social and video enriched media, and 64% of all digital ad spending in the US is now driven by mobile. And we've seen that, of course, with Facebook and Twitter driving that aggressively. $72 billion in the ad spend market, and it's shared by two massive tech titans, of course, Google and Facebook. And if we look at the numbers, we see that Facebook's at about 17% of US digital ad spending, Google's at 41%. Nobody else is even on the map at 4%. Everybody else is under 4%. Together, Google and Facebook enjoy 58% of the market, and on a worldwide basis, it's almost half. Same thing when we look at mobile ad revenues between Google and Facebook. They own 54% or over half of the market. After that, the very low down on the list also ran is Twitter at 2.6%. We all know who owns search. In fact, Google in the US owns 74% of the search market. After that, it's Microsoft, and Yahoo is still alive and kicking there. But Facebook is king of display. And in fact, Facebook's at about 35%, and if you combine Facebook and Google, they're almost half of the entire display ad market, which is growing slightly faster than search, according to eMarketer. The next one down on the list is Twitter at under 4%. And of course, we know that when it comes to social network ad spending, Facebook is the king at 78%. Nothing even comes close. Twitter and Snapchat are lagging behind. Together, they're under 10%. And of course, it's not just about the dollars, it's about the data that they own. So that's the preamble to look at the big picture. And now we're going to hear on a more micro level what is happening with Facebook, Google, and Apple. And we're going to start with Gene Munster, who is the Managing Director and Senior Research Analyst at Piper Jaffray.
Thank you, Jeff. So we're going to go really quick, so buckle up here. Talking about Apple, and first I want to start, the two big takeaways here is that Apple, we think, is going to become more of a services business over the next several years. That's going to take a big shift in terms of how they approach the market, a negative impact on profitability, but ultimately a longer impact on growth and visibility. Second is we think that there are two big markets that they can go after, which is augmented reality and also auto. So there is hope around future market segments. One big misconception is that Apple's missing everything and they're just not growing. And part of this comes from investors looking at the growth rates, and it's been pretty low over the last couple of years. But if you look at the market cap of Apple, it's down 4% in the last 2 years, where Google's up 42% and Facebook is up 52%. And that kind of fuels this belief. There is one thing that Apple has missed, which is the low-end phone market. And I think the key takeaway there is that we think that they can approach that market with more of a services-first approach. Moving to the iPhone, it's 66% of revenue. It's 73% of earnings. Ultimately, this is a big segment for obvious reasons. In terms of the growth rate, it's stepped up with the iPhone 6 and at 37%, and it's dropped back off. It's down 10% more recently. We do expect that the iPhone to try to lower off in terms, or steady off in terms of the growth rate at 10%, in part because the upgrade cycle we think ultimately is going to be more powerful. The lag between upgrades has been extending, and people are holding on to their phones longer. It's now 33 months versus before it was 28 months. ASPs on the iPhone jumped up with the iPhone 6, but they've been kind of all over the place in the last 2 years. Moving forward to the near term, one of the reasons why we're optimistic about the iPhone is that everyone still wants an iPhone. It's not about a big feature. It's just in general, it's high on the wish list. Our consumer team showed that 7% of people want an iPhone this holiday versus 5% a year ago. That's the highest ranked product of any product that's on the wish list for the holiday. The number 2 is the iPad, the Mac at 2%, and the number 3 is the Xbox at 1%. And so this whole theme that Apple doesn't have exciting products isn't necessarily resonating with consumers when they think about things that they're going to invest in. Unfortunately, you're going to have to wait for that iPhone because the lead times are a couple weeks. One of the other reasons why we're positive about the iPhone more longer term is this massive wave of upgrades that's coming. The longer that people hold on to their iPhones, the bigger the base of the upgrades. And we can go through and model that out. And that base is going to reach around 300 million units in the next few years. To put that 300 million units into perspective is that Apple has, at their peak in the iPhone 6, they did 235 million. So in other words, is this big base of old iPhones essentially should carry the iPhone growth for the next couple of years. In terms of the iPhone 10, there's a lot of focus on what the expectations, obviously OLED, which would be a wraparound screen, it would look more futuristic. VR and AR is another piece. Apple's been talking more about AR recently, and we think that they can shift from their typical playbook of being a fast follower to actually innovating around AR with the iPhone 10. The AR, the device of choice, is going to be the phone for the next 5 years. Eventually it moves to a wearable. But right now with the iPhone 7 Plus, the dual camera, there's depth mapping, so they can do more with AR. But look for that to be one of the key differentiating features, not just it looks a little bit different, but the whole AR theme with the iPhone 10. Shifting to services, this is really our big takeaway, is that services right now is 12% of revenue. It's going to be a $28 billion business next year. That compares to Facebook, which is expected to be a $36 billion business. The primary part of the services business is the App Store at 60%. The other is iTunes, and then the balance, 25%, is iCloud, AppleCare, and Google. That's the Google search revenue. Apple Pay is in there, but it's so small it really doesn't add up. The growth rates are particularly impressive around services. Even though the numbers are getting higher and more difficult, the comps are getting more difficult, the growth rate has been accelerating. We're modeling for it to go from 17 to 12% next year, but that's pretty conservative. I think that there's reason that this can be a much bigger business, as we talked about. There's a little boost that the services business is going to get on December 15th with Super Mario Run, which will be a $10 app. They're also being more aggressive in terms of buying apps and trying to sell you different services. Here's one for a $240 a year option for cloud storage. But overall, apps are just generally getting more expensive. If you look at the top selling apps on desktop right now, there's a $300 for Final Cut, $200 Logic Pro. Dropbox has a $750 Pro option. It's an annual subscription. Apple takes 15% of that, so just over $100, and that's pure margin. On the phone side, it tends to be more gaming. Just looking at Pokemon, you can buy Pokemon coins from a $1 package to $100 packages. But the concept of how people are spending and the amount that they're spending is increasing. The key takeaway from today's presentation is what we're suggesting Apple do, not the fact that they're going to do this, but to shift to a services model. Right now, Apple is profit first, which means they try to make a lot of money when they sell phones. That's resulted in small market share in the world for their phones, but they have the majority of the global hardware profits. Overall, they have a 20% operating margin. Profit first is very different than the right approach, which is product first. That's basically what Google and Facebook do. And in a product-first approach, they try to build user bases. Examples would be WhatsApp and Google Maps. And by doing that, it yields much higher margins. So when you put this together, we think as Apple focuses more on services, it can be a more profitable business. Today, we think that it has a 40% operating margin, about 50% higher than the overall Apple business. So how could they actually do this? And one thing is that they could grow their current 1 billion active devices and the $37 a year per user. And the way they do that is by reducing the price of the iPhone, potentially doubling the market share of the iPhone. This would cause their current stronghold in the US and Western Europe to expand to Latin America, Eastern Europe, and Asia. And ultimately, we think this is going to be a more profitable, more sustainable business that investors will reward. Quickly moving to the Mac, it's 10% of business, the third largest market. The growth has been declining for the last couple of years, but now with the new versions of the MacBook, it should jump up for next year. One impressive stat around the Mac is for the last 15 years, the ASPs have been astonishingly resilient. They're down 14% during that time, which is a surprise. The iPad, now 9% of revenue. The growth has been all over the board. It bottomed out last year in 2015 at down 22%. It's a little bit better in 2016, but we're still expecting it to be down about 10% this year. The ASP saw a bump up with the iPad Pro, but they're still all over the board. The takeaway from the iPad is that this is probably not really a growing business longer term. It's just generally going to be flat. But it is an important part of the story because when we think about the services approach, it's an important part of how people interact with the web. Moving to the watch, we're expecting 18 million units next year, or $9 billion. That means that the business compares to Fitbit, which is about $2.5 billion. So this is a big business that's basically 3% of Apple, hidden within Apple. Their key focus today is activity, but ultimately we think that they're going to shift to more of a wellness product. We would expect more healthcare providers to start to issue watches to people for better wellness. And Apple TV, if you would have asked me 5 years ago if I would be looking at this slide today, I would find that hard to believe. In fact, it is just a hockey puck. But they have a nice play here in terms of how they're selling content. And specifically is that the top 3 grossing apps in Apple TV are HBO, Netflix, and Hulu. So this is part of that broader ecosystem. In general, we think they've sold about 40 million Apple TVs over the last 9 years. And quickly on Apple Pay, it doesn't really matter in terms of the size of Apple's business, but it's important in terms of the experience. Apple Pay in September was up 500% year over year, the number of transactions. The number of transactions in the month of September equaled the previous 12 months combined. And now it's available in browser, so you can use it in your desktop. There's several 100,000 of those websites that allow you to do it in desktop. And here I'm buying a pair of socks. I want to note that once you select the size of the socks, a buy button comes up immediately. You don't even deal with a checkout or an express checkout. It's right there. Retailers don't want you to abandon, and they want you to purchase as soon as you're in that mode. That total transaction took 10 seconds. PayPal is in trouble. As we look at the top 100 retailers, we're seeing those retailers starting to shift away from PayPal and starting to emphasize this better experience for iOS. And just quickly, in terms of the future, we know that they go through products where they start small and get very big. Fun to think back that the iPod one day was 50% of business. Today it's 1%. But the 3 key areas of focus is they're going to be ramping up their R&D spend. Apple's growing R&D faster than their revenue. They're going to spend about $10 billion in R&D versus Google at about $13 billion. And the 3 areas that they're going to be focused on, we think, for new categories. One is foldable phones. The idea is there's bendable glass today. By putting a charge through it, you can make it strong. Eventually, your phone and your tablet get replaced with some sort of foldable device several years. AR is a huge deal. Next version of AR for 5 years is your phone. Eventually, it's going to be a wearable. This is important because the way we interface with machines is changing. It's going beyond a crude interface of a touch screen to more intuitive voice, a gesture, a gaze, even your thoughts to drive that. And lastly is auto, a topic we approach with some hesitation of our lessons in the past. That because Apple's investing in something doesn't mean that it's going to see the light of day, but it is a big market. And just point out the real market here isn't the opportunity for Tesla to sell 500,000 vehicles in 2018. The real market is a change in terms of how people are using transportation. SurveyMonkey estimates there's 20 million monthly subscribers for Uber and Lyft. And that is the opportunity where eventually transportation is going to go to the ride sharing. And they obviously have this letter that was released last week that the Wall Street Journal was reporting on. There's a debate, are they going to build a car? Are they going to be the brains behind it? We lean to they're going to build a car because they still want to do a lot of the hardware and the software. So that's Apple in a wrap.
Let's hear it for Gene. And now we're going to learn about what's going on with Google with Danny Sullivan, who's the founding editor of Marketing Land. Take it away, Danny.
Thank you. Good morning. So I'm not a financial analyst. I've just covered Google for a long time, since before it existed. Google is much more than search, and Alphabet is supposedly more than Google, but search is the biggest chunk when you start thinking about ad revenues. And we know this because that money there is almost all the money that Alphabet itself makes, and that's just the Google money. And all these things that you see that I've listed there and other things are wrapped up in that money, but it's really mostly ad revenue. We know from their releases that they've done, 89% of all that money I showed you is ad revenue, and we also know that 50% of online ad revenue is search. So that brings me back to talking about search and why that's so important. One of the things that alarmed people, especially last year, the year before, and now they seem to be kind of relaxing, is the idea that Google's cost per click rates have dropped. And the cost per click, of course, is when you click on an ad and Google charges the advertiser a few cents, or it can be like, many dollars for that click. So the cost per clicks were dropping, and you'd have financial analysts and others starting to freak out like, the prices are crashing, but the number of clicks have been going up. So basically they're moving more inventory at a cheaper price, which is why their ad revenue has continued to go up. It doesn't really kind of matter what happens to your cost per click if the overall amount of inventory that you have out there is moving. Their growth areas that they said recently are mobile search and YouTube. With YouTube, the big impact that it had is that the cost per click started plunging, and that freaked everybody out. And Google, of course, loves to not tell you exactly what's going on, and then it finally begrudgingly says, all right, we'll give you a little bit of insight into what's happening. We have a lot more YouTube advertising happening where we didn't have as much before, and the YouTube advertising is at a lower price, but we're still making a lot of money off of it, but it's brought our overall cost per clicks down, which is at this point I go on the mini rant thinking, well, it'd be really nice, Google, if actually we had insight into all your businesses. Maybe you could tell us actually how much you make off of search, or how much you make off of display, or how much you make off of YouTube, but that's just me being naive. Mobile search is resonating, and here's a lot of words from Sundar Pichai telling you that it's resonating, but here are some images that explain it better. Yeah, it's resonating because if I do a search on mobile and the whole page on my phone is ads, that resonates very well. Over here is desktop, and you can see that, well, it's not quite the entire full screen that I saw there. There was one little organic thing that's there, but yeah. Over here on mobile, I've got half my screen listed with 3 different items that are there, and I can scroll through them fairly easily. Percentage-wise, desktop still has a bit more, but I suspect that overall, the ads on mobile are tending to dominate the page more. It's easier to just be clicking on them and not to scroll down, because maybe we don't want to scroll, I don't know. But certainly there's a lot of ads on mobile. And there's a lot more ads on Google. Earlier this year, they said, hey, you know what? We're going to put 4 ads above the fold. Sometimes it's fun. You can do searches on Google, and you get the 4 ads above, and you get the 4 ads at the bottom, and you get 10 links in between, and then you're like, it's all ads all the ways down, which is great for Google and people who own stock in Google. And I mentioned I don't own stock in Google. AdSense ads also are the ads you see all over the place on all the fake news sites. They've got to make some money. Well, good news, they get to have more than 3 ads on their pages. In the past, Google was like, no, we don't want to have all these ads. You don't want to have too many ads on things, which would be an odd message, because if you were an advertiser, then they'd also send you messages like, how can you get more ads on your page? Sorry, if you're a publisher. But they increased the number of ads that they're letting publishers put out on their pages, so that's going to have an impact as well. This, by the way, takes me way back to, it's a little mini story, I think I can squeeze it in, to once being in a discussion with a financial firm that no longer exists, and I had one analyst who was really, really upset with me because he had calculated out everything on the spreadsheet of how much money Google was going to make. And I was like, I don't even know how you could do that. Because at any time they throw up more ads or they open up things they didn't have any before. And, you know, I don't know how you anticipate all that stuff. But fortunately, I don't have to. Meanwhile, what about bots? Because we've been hearing all about them and they're going to change everything. And are they the thing that's going to kill Google because I'm just going to be able to order flowers on Facebook through Messenger? Well, Google kind of has a bot. They don't call it a bot. They've been deliberate not to call it a bot, and perhaps wise in that. But they have Google Assistant. That's their new thing, and I kind of dub it as assistant search. You find Google Assistant right now baked into Hello. You're all using Hello, right? Yes? No, you're not. Pixel, which is the new Google phone, and the Google Home, which you've seen the ads for on TV. This is the promise. You say, I want to book a table, and the assistant says, yeah, I got it. It's all set up. You're all done. You have to do anything. This really works. I know because I tested it, and then I forgot to cancel the reservation. The next day, OpenTable was like, hey, why didn't you show up at Cartino with your reservation of 8 or 6? I was like, oh, I'm really sorry. I was just testing something. Actually, it's a little more complicated than that because something went wrong behind the scenes. So it wasn't my fault. And OpenTable, forgive me. And now I'll be able to book tables in the future. Here is me using the Allo app where Google Assistant was going to help me dialogue with someone else by offering suggested replies to save me time. So after I started doing a little bit with this with my wife, I then recreated what our conversation was, just using all the suggested things, trying to figure out if we should go to the movies, and we were never going to get there. But actually that kind of mimics our real life conversations. What should we go? I don't know. Whatever you want to do. Whatever you want to put on. Just put something on Netflix. It's on the watch list. I don't know. Why did you put it on? Anyway. Google Assistant is also baked into the Pixel, and I do not think it is the killer app that is why someone's going to buy the phone, and in particular because I find it very confusing and hard to use. Google with buttons is one way I describe it. So here I am trying to book Rogue One tickets because I'm a big Star Wars fan and I'd like to go see it. And so I'm saying, hey, Google, book Rogue One tickets. It's like, and so it comes along and it's saying, well, here's a result from the web. Well, that's not very helpful. So I'm like, well, when's it playing? I don't know when it's playing. And this was like the day it was coming out, right? And then you see at the button, it's like, since I gave up helping you, do you want to push a button? So I pushed the search results button, and the search results button, it's like, now I'm getting actual traditional results where it's like, oh, you want Rogue One tickets? Here they are on Fandango. And yes, they were on sale, and they were having screen time. So I don't know that Google Assistant was really helping me there. I could have just done the search in the first place. But we'll see. You know, they're expected to be selling a lot of Pixels, I guess. My 17-year-old loves the camera on it, but it doesn't have Apple Messages, which apparently is actually still the killer app for teenagers because all of them are talking on it and not on the Snapchat. So there you are. But that could just be a focus group of one. Google Home is the last of the things with the Google Assistant that's out there, and it is really, really good in my opinion. And I have both the Google Home and the Alexa because there's nothing that annoys my wife more than when I try to make both of them do things at the same time. Why don't you just pick up the switch and turn on the lights? Because Alexa can do it. Watch. Alexa, turn on the living room lights. Anyway. It is like having a real person that you can just ask your questions. This is really the transformative thing for me. I'm at the refrigerator and I open it up and the guinea pig in the corner hears me and starts going woo, 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 because it wants something to eat and it knows that I'm in the kitchen. This is what guinea pigs do. They're very smart. And so I'm looking there and I can see the grapes and I know it can eat grapes, so I was just kind of testing something. It's one of those things where a lot of times I'll be in the refrigerator and I'm like, oh, can I eat asparagus or can I eat this? And you want to know because you don't want to kill your pets because it's very sad. So I in the past would have gone and grabbed my phone or gone to the computer, typed in, can guinea pigs eat eggs, whatever. But at this point, the refrigerator's open, the cold air is pouring out on me because I don't care about the planet, whatever. I can let it go. I've got solar. And I see the grapes, so I'm like, hey, Google, can guinea pigs eat grapes? And sorry if I've set off all your phones. And then it comes back, it's like, guinea pigs can eat grapes, as long as they're the seedless variety. That was magical. That is something where I did not have to go do something and it gave me the answer. It's also a place where it shines over Alexa, because Alexa cannot handle those more complicated questions. Now, by the way, if you had asked Google, and you can see this on my Twitter last week, are women are evil, it gave you an answer that demonstrated why you have problems, because when it grabs all this stuff off the web without vetting, sometimes you get really terrible stuff. But for a lot of stuff, it might be all right. And I actually think that if the focus is on bots, the household companions actually might be the next big thing. These are really useful. and they're going to continue to increase. And if one of the things that most people use them for right now is audio speaker, information is coming up from behind, and Google Home can do both of those very well, to whereas the Alexa doesn't do so well on the general information things, though I do love my Alexa. And if you wonder how Google makes money off of this, well, potentially they throw the ads on your screen. They are tracking everything you're doing on Google Home. They give you more information that's out there, or certainly just the kinds of things you're searching for, something that no doubt they will find useful in some way to monetize us throughout our lives. So overall, I'd say the state of Google search remains strong among all the kind of possibilities that are out there, although you never know what's going to happen with the antitrust stuff in Europe, or maybe the antitrust stuff in the US, because we got changes coming our way. Here's a whole bunch of links. I'll tweet out all the sides. If you follow me on Twitter, you can pick it up from there. And that's it. Thank you very much.
It's amazing. Both these gentlemen have kept pretty much within their 10-minute time limit, so that's really outstanding. And now it's my pleasure to introduce Mark Mahaney, good friend of mine who is the managing director of RBC Capital Markets, and he's going to tell us all about Facebook.
Thanks, Jeff. I need to start with a confession, Jeff. I own a BlackBerry. I do work at a Canadian bank, so that's my justification. I also own a Pixel. I have one of the 7 Amazon Fire phones that was sold in the San Francisco area. And if Facebook comes out with a phone, I'm sure I'll get that too. But they won't. All right, Planet Facebook. What's up with Facebook? What's next for Facebook? Last year, I pointed out here that Facebook was bigger than China. And today, it's 25% bigger than China in terms of the total number of users on the site. In terms, that's on a monthly basis. On a daily basis, it's almost as big as China. And the growth rates haven't changed at all in a year, which is pretty shocking. You don't normally see that. There's something called the law of large numbers. Maybe this is the law of massive numbers, but it hasn't hit the growth rates yet. So they're doing something right. The revenue growth rate that we on the street look at is these are the best fundamentals in the internet space, not just on the top line. 50 to 60% revenue on a 25 billion revenue base is extremely rare, and especially the consistency of that growth. It's not a product cycle company, it's a secular growth company. The consistency of that growth is extremely rare. This company is generating about 2 to 3 billion in cash flow a quarter, which gives them a lot of options to figure out what to do in the future. Can it get any better than this? Probably. This is a reversal of slides that almost everybody puts out where they show rising online penetration. And what I tried to do here is show that there's still 2/3 of all ad dollars globally are still offline. 2/3 are still offline. That total number is like 400 billion. We're 20 years into the commercialization of the internet, and still 2/3 of ad budgets are offline. So yeah, can Facebook sustain that kind of growth rate? Possibly. We also notice that there's no slowing down in advertiser interest in Facebook. So we do these semi-annual surveys with Ad Age. I think it's the largest survey that's done of marketers out there. And we've surveyed about 500 Facebook advertisers. And we asked them basic action questions. In the next 12 months, do you plan to increase, maintain, or decrease your spend with Facebook? We're waiting for that crest moment when advertisers indicate, okay, we're fine now, we're gonna maintain budgets, but we haven't gotten there yet. In the most recent time we ran this, 64% of advertisers said over the next 12 months they expect to increase their ad spend with Facebook. Only 6% said they plan to decrease it. Until we see that Facebook, that crest moment for Facebook, I don't think the growth is gonna slow. How big could the company get? There's a great proxy out there. This is a company called Google that accounts for 15% of all advertising globally. Facebook currently is about 1/3 of that. I actually don't think that Facebook would be able to catch up to Google in terms of a percentage of overall ad spend, because they just don't have the commercial intent that Google has when people do searches for commercial items. Maybe that'll change. That's a huge hill to climb. But still, there's a proxy out there that says there's a lot more growth here at Facebook. And it also helps if you have 1 billion users. These are most of the assets, I'm sure I'm missing something, most of the assets on the internet that have 1 billion people who come to them pretty much on a daily basis. Geez, that's one of the reasons that the top 100 companies in the U.S. account for more and more percentage of GDP is that they now have more global options than they did back in the 1930s. It's a basic point. These companies, these assets have 1 billion users a day. For Facebook, it's Facebook itself, Messenger, and WhatsApp. Boy, you give a group of smart engineers 1 billion people to work with on a daily basis, they'll create opportunities. They should be able to. We also, in a report we did recently, talked about 10 key growth drivers across the internet, across technology, really across consumer internet over the next year. These we thought were the most important trends. And if I just think about how Facebook checks off against these in terms of increasingly mobile usage of the internet, social ubiquity. I think Henry Blodgett in the first presentation talked about the big new trend being social video. I tend to refer to that as videoification. I think it sounds better than social video. And then there's AI and ML, artificial intelligence and machine learning. And the fifth of these 10 trends is what I call the cash pileup. Facebook checks against 5 of those, and it checks against them extremely well. So we think that's really well positioned for what I think are 5 of the 10 largest growth drivers or growth factors on the internet in the next 12 months. And we're seeing ongoing innovation. And what I've seen over the last 20 years of looking at internet companies and technology companies, when the innovation slows, inevitably the money slows and the stock gets hit. And I haven't seen that slow down on the innovation side. So this is just a couple of quick examples. The sharing capabilities that we're seeing that have been brought out on Instagram recently. The inclusion of shopping, we've got more sharing functionality, we've got more shopping functionality. At the end of the day, that's really what matters. You've got to build out the functionality of Instagram, build out the functionality of Facebook. What I see is constant moves, innovative moves that I think are allowing Facebook and Instagram to become more and more useful on a daily basis to consumers. That's a good thing for Facebook. And then there's the innovation for the other customer set. 2 basic customer sets here for Facebook, the consumers and the advertisers. Here are a couple of examples of carousel ads, dynamic ads. The more innovation, the better. And this seems to be a company that kind of gets that and has gotten that for a while. And again, you have 1 billion users, your ability to do 50,000, 65,000, 70,000 tests on a daily basis. Boy, that gives you the ability to do A/B testing in a way that nobody's ever been able to do it before. Facebook, however, is not without problems, and here's the example of the fake news stories, and maybe this is a negative for Facebook, and you probably do need to somehow check quality of content. Although, look, any of us go walk outside and pick up some of the tabloids in the area. I think that's another example of fake news. And I'd also give you the point that from an advertiser perspective, you have a platform that had a few fake news articles that may have influenced the US presidential election. That sounds like a pretty influential platform to me. I'd probably want to advertise on it. There's also this other challenge coming up. It's called this company Snapchat. You may have heard of it. And last year somebody asked me about whether I thought Snapchat would continue to grow, and I think I made a really stupid statement to the effect of, probably not. It wasn't quite that simple, but never underestimate the ability of these companies, if they've got really good innovation, really good management teams with that secular tailwind behind them, to continue to grow, and we've seen that at Snapchat. So is this an issue for Facebook? We have a report coming out this week where we did this series of test surveys of about 3,000 internet users in the US, and we took them out by cohorts. So the teens, 13 to 18, 19 to 25, 26 to 35. And we asked every one of these cohorts, if you could only pick one, if you're on a deserted island, you can only pick one social media platform, who are you going to pick? And so what from this is that in every demo, 19 or over 18 years old, Facebook utterly dominates the users' interest, users' attention when it comes to where if they only could pick one, where they would go. And even in those teens, you get 28% of teens said if they could pick one, it would be Snapchat. Number 2, Facebook at 25%. And then there's the great teen hedge called Instagram that Facebook acquired a couple of years ago, one of the best acquisitions in the entire history of the internet. And I couldn't help but put in this line at the top, nobody views teens as desirable. If anybody has teenage kids at home or 3 teenage kids at home, this is it's a tough crowd. They're not necessarily always terribly desirable. You prefer soccer moms with the money rather than the soccer players. I'll leave it at that. All right, here we go. What's next for Facebook in a minute? The next 3 years, this is Zuckerberg. We're focused on continuing to build our community, help people share more of what matters to them. The next 5 years are about building newer products in the ecosystems. Next 10 years, building new technologies to help people connect in new ways. So here's 3 ideas, 3 examples. I touched on these last year. They're more developed this year. Facework. Okay, it's Facebook in the workplace. I was skeptical last year. What I've seen in the last year is about 1,000 organizations now are using Facebook in the workplace. It's organizations like Oxfam, but it's companies like Booking.com and Starbucks. So this is a question mark. This may be an interesting new opportunity for the company. Last year I also talked about Facebook in the marketplace or Faceplace. The advantage that Facebook has with the platform that it has is you can lay out these marketplaces, you can lay out this buy button functionality, this e-commerce functionality on the site. Hey, if it doesn't work, no big deal as long as you don't undermine the user experience. But if it works, it's all incremental usage, functionality, and eventually revenue and profits. But the third thing, and what I'm most interested in, are these messaging platforms. And people talk about these massive messaging platforms in Asia, QQ Messenger, WeChat, Kik, Line. There's 2 of them that have over 1 billion users, and Facebook owns them both. 33% of people on Facebook go to use Messenger on a daily basis. And it's a completely unmonetized asset. Got 1 billion people who use WhatsApp. It's less used in the US, very heavily used in Europe and in parts of Asia. Almost completely unmonetized asset. And if you watch these apps and you use them on a daily basis, you'll notice more and more functionality built in terms of payments, sharing, gaming. You build out the functionality, you build out the use case, they become sticky, those things get monetized. It's probably the most interesting long-term opportunity we think the company has. How big is it? Quick spreadsheet work. Just looking at how some of these other messaging platforms are monetized, we think each of those, Facebook Messenger and WhatsApp, can be generating within 3 to 5 years, $5 billion a year in revenue each. So that's it, I'll sum it up. We got an asset that's got 1.8 billion users served and consistently growing, not accelerating, not decelerating, consistently growing. You got a 28 billion ad revenue run rate, 55% ad revenue growth, extremely rare, and yet it's only 5% of global advertising spend. And I've yet to see that crest moment in advertiser demand for Facebook. Consumer and advertiser innovation continues, and we think Facebook's going to get more in your face, and we're particularly interested in the messaging opportunity with $2 billion platforms. That's probably where the biggest new source of growth will be for Facebook, and that's it.
Well, that's a lot of information. So now we're going to have a little bit of a Q&A to kind of dig a little deeper into this and also take a kind of a broader lens look. We have seen over many, many years a number of companies that have gone from heroes to zeros. And just in the B category alone, I can think of Borders, Blockbuster, and BlackBerry, who at one time were indomitable, like the companies that we've just been looking at here. Thinking of the 3 companies, excluding the one that you're covering or that you talked about today, what vulnerabilities do you see in the other companies? Not necessarily that they will decline like, say, Borders or BlackBerry, but what vulnerabilities do you guys see?
As an Apple analyst, I also cover Facebook, don't do as good of a job as Mark does on Facebook. I'm envious of their growth rate, but the obvious vulnerability is that Snapchat's growth is a sign that this is behaviors change and social behaviors change. And to me, their response of once you hit 1 billion people and those are defensible, I think there's some truth to that, but I wouldn't have foreseen the pace that Snapchat has had and that impact on Facebook. Pretty obvious one, but.
Yeah, Henry Blodgett referred to Snapchat, I think, as an example of nichification. And certainly in the data that Mark shared about Snapchat versus Facebook, we've seen a number of studies at eMarketer that confirm that idea that while Snapchat is super popular among teens and millennials, Facebook is still dominant in terms of overall usage. But what other vulnerabilities do you guys see with these three companies?
I think you have to mention, regulatory risks, and these are dramatically large assets. If you have, changes in political administrations, which we've had in multiple continents, that could really come back. We haven't really had. These things are as close to monopolies, or Google is as close to a modern monopoly as we could find. I know Danny mentioned at the end, but it's an increasingly material risk for Google. Now, I don't know what they would divest, but could somebody come in and change the way that they have to tweak their algorithms and open up some of that black box? Yeah, I'd probably worry about that more than anything else with regards to Google.
Mm-hmm.
Danny, what do you see?
I'd agree on both of those things. The one thing that popped in my mind was on Apple, and I could be wrong, but to me, I find a vulnerability in that they are actually so closed, and they have advantages in being closed, but it's like what I said about the Messenger platform. It locks my son into the iPhone 7 or iPhone 6. He doesn't want to leave it, but at the same time, if all of his friends were to jump to WhatsApp and it's cross-platform, they don't have to worry whether or not they're Android or iPhone, they move. Snapchat, you'll go both places. So there's so many Apple things that I cannot carry, and I'm a multi-device user, and there's so many things I cannot carry across, but I want to, or I may move, or I'll use Gmail because I know it'll work the same on all the different types of things from there. So I sometimes wonder if the fact that they don't open up their software in more places. What's the one thing that they did change? It was Apple Music? Not Apple Music.
They opened up?
No, there was one app they kind of finally had forced onto Android, but because of an Apple acquisition. I can't remember if it was Beats or Apple Movie or whatever. If it comes back to my mind, I'll let you know. But Apple Music's another example. Aside from me personally finding it frustrating, and I don't think I'm alone, I've got Spotify on all my different devices. And they work on all those different devices. And so I kind of want to stick with it in some ways. So,
Don't get me started on Apple Music, because I've had some issues with that too. Whereas I've spent probably $1,000 on music on Apple, and now I can't access it because it keeps trying to drive me to pay for Apple Music when I already have Spotify and Pandora. Let's talk about, again, speaking of vulnerabilities, Mark, you touched on WeChat, and it's, of course, huge in Asia. And do you guys see similar threats from companies like WeChat, which are all-in-one mobile applications? And how is that going to play out for Google and Apple?
Let's see. It does seem like in some of these markets, it's dramatically different internet, front doors, user interfaces. And we haven't really seen cross-pollination unless Facebook works its magic and actually gets into China. Google's out of China. None of major internet assets that were started in China have gotten out of China. So this seems like it's not a war of two worlds. It's just two different worlds, and they don't seem to cross at all. Whether that could change or not, I don't know. And my guess is that it would have to be through an acquisition. And so I would imagine in the next 5 years we'd see one of those major Asian assets, Tencent's probably at the top of the list, looking to do a major acquisition of one of the media assets in the U.S. And that's where we'll finally start to see whether those companies can have an impact in outside of China, in Western Europe and in the U.S. and other parts of the world. And then I'm very curious, I think Facebook will be the first major U.S. media company, although they're going to have to accept censorship to expand into China. Although I doubt that they get dramatically more than tens of millions of users there, but that's what I'm looking for.
Danny, what about Google?
In terms of them being...
Like with WeChat, how are they going to compete with...
I think that they tend to be more fragmented in the stuff that they're doing. It's difficult for me, and especially when you start talking about some of the bots and the interaction with the chats, that I haven't followed it that closely, but my understanding is a lot of this stuff has emerged because it made sense in China and a lot of the Asian markets as a way to interact. And it's been interesting from my perspective to watch it be like this special sauce. I was Facebook when they did their F8 thing, and they did the whole thing, and it worked, right? That day, I ordered flowers from Mark Zuckerberg and sent them up there, all doing on a chat, and it was very efficient, and it was funny. It made a cute article, or at least I thought. But a lot of people finding it very complicated to do all sorts of other things. And so, whereas the bots and the interaction might make sense in one market, we have phones and apps and everything that work very, very well and very efficient. And so we don't necessarily need to go and start chatting to all of our stuff. So I kind of wonder if they're going down a blind alley in some of this stuff. And maybe some of it will pick up, but maybe it isn't going to be, we have this all-in-one kind of solution like that, because it might not make as much sense.
There's some people that are saying that the app market will eventually start to wane or give way to the triad of technologies of voice recognition, chatbots, and artificial intelligence, which in essence, if I have a personal assistant that I simply talk to, whether it's an Alexa or it's my phone or my watch or whatever it is, but it's all connected up in almost a semi-closed loop system, where do Google, Facebook, and Apple play into that? Are they going to continue to dominate or dominate even more? And how does anybody else, an insurgent, insert themselves into that closed loop system?
I think something like Google is in a little bit of a tight spot with the whole voice side, because really as you said, what you're trying to do is get one result back. And so how they advertise around that remains to be seen. I give them credit for trying to innovate and be a leader in that. But in terms of, so I think the Google impact on the advertising and how voice and more natural interfaces impacts that is probably an A topic for the next few years. In terms of where Apple's at, this is just a pure opportunity for them. It's a new way that they can sell you hardware and sell you services on top of it that can basically take advantage of the ability to use voice and gestures and your gaze to...
Think about it as who has the most data wins, and who has the most useful data really wins. And I think voice recognition, voice search is a huge home run for Google, because they're just going to learn more about you. I'm sorry, they'll figure out a way to monetize that. They know more about you. They'll be able to put products that are more useful to you, services that are more useful to you in front of you. And they can mostly close the loop, but there's one company that can really close the loop here that is getting deep into voice recognition, voice search, that people use for multiple things, for getting information, also to entertain themselves, and also to shop. And they can probably close the loop better than any of these three platform companies potentially in the future, and that's Amazon. The data, whoever has the most data, and Google probably has the most data, Facebook has a ton of data, the question is just how commercial it is. But the company that closes the whole freaking loop, that's the company that could be the most innovative 10 years down the road. That's Amazon.
I would give Google the Google Assistant is exactly what you said. That is their vision, and that's why they don't call it a bot, and it's a different type of thing. And I agree. I think that is going to be a very compelling thing forward, and I think they're going to be very strong. And the reason I think they'll be very strong is both the weakness of they give you the one answer, but they also give you an answer. And the minute you try to ask a Siri or an Alexa for something, and it goes, I don't know about that, good luck. You don't use it. Or you don't use it for those types of things. And that's where Google's taking a risk, but I think it's going to cause you to try to use it a lot more with it from there. And then the other players that are out there do not have the search capabilities to come into it as well, but they may be more efficient in doing other types of things. So,
I'm going to try to cram one more big, heavy question in here before our time's up, and that is, in essence, with social media, and particularly when you think of Facebook, so many people get their news through Facebook. Google, was it Instant Pages?
AMP.
Sorry, AMP. Facebook Instant Pages, sorry. And then Apple has Apple News. And fundamentally, the question is, as more and more news starts to go through these other entities that, quote unquote, aren't in the media business, but are channeling so much of this news information, how does the how do the journalistic entities, the traditional publishers that, as we've seen, their print readership's declining, the digital dollars are not making up for those declines, how are they going to survive or even thrive when Google, Facebook, and Apple are sucking the wind out of their sails? And what does that say about journalistic integrity or reporting?
I'll start, and it's easy with Apple because no one actually uses Apple News. No one looks at it. So
no threat there.
No threat to Danny and Mark on this.
all of them are at least unique in that they are letting you, if I recall, insert your own ads. And AMP is probably the most agnostic of them all, where it really is like, it is just another format. It is just another version of HTML. So it's not, there are concerns, however, that the URL is Google hosted, and eventually I'll get back to an article on that, but it's still your own content. What I would say the best thing though publishers can do is not to rush to any of these things as their next great savior. I think you're an idiotic publisher if you do not continue your own weather.
Scarcity value, and I think what the internet has done over the last 20 years is amplified some signals, and it's certainly amplified a lot of noise. It allowed a lot of people to express opinions, and actually then that creates scarcity value for the people who provide signal. So I think when you get scarcity value, and that, if you're that signal and that wall of noise, that you can command. Maybe that's why subscription models have started to really build up in terms of content. So if you got great signal, and here's the plug, like Business Insider, they'll invite me back now. If you got great signal like that, then I think that you can command, people will pay for that.
Well, you mentioned scarcity value, and that's unfortunately a segue for the end of this discussion. So please thank Gene, Danny, and Mark for their conversation.
It's been great hearing about the strategies behind these powerhouses, but this leads us to the question, how does this translate in the real world? We've gathered 4 of the sharpest digital publishers we know to help answer that question. And let me introduce, leading the discussion, Jason Kint, CEO of DCN.
Good morning, everyone. We've got 4 great panelists to take us through this discussion. Quickly down the row here, you've got their backgrounds in your materials, but we've got Mike from the Daily Beast, Dave from Bleacher Report, immediately here, John from now Cheddar, with lots of previous experience in this space, and then Adam from Taboola, who many of you know. And again, I'm from DCN. We represent about 80 premium publishers, big, small, large, old, et cetera. So, but I'll mostly be just doing navigation of this discussion around best of frenemies. So based on the title alone and the morning setup, you can imagine we're here to talk about platform power, distribution, particularly 2 companies. I think it's fair to say, without knowing all the financials of these companies and their individual businesses, that most of your revenue comes from advertising. And from a DCN perspective, so you know, across our membership, advertising is probably 80 to 85% of the revenue. Henry shared a stat yesterday morning, it's been in the press a lot, 100% of the growth in digital advertising, 100% are going to 2 companies, Google and Facebook. About 60% of it's going to Google, 40% is going to Facebook, and the rest is pretty much flat year over year, first 6 months of this year. Show of hands, how many people in the audience work for Google or Facebook? All right, so
we can say whatever we want.
There you go.
We can say whatever we want.
They're always listening. They're always listening.
Sometimes don't raise your hands, but I'm guessing there's 99.9% of you don't work for those 2 companies. So you're dealing with a zero-sum game, and most of the revenue, counter to popular belief, doesn't get passed on to the serfs that are working the land, who are on the stage with me. So let's react to that number. I want to start with you.
Introduction.
Yeah, thank you. Dave, when you look at that sort of market dominance with 2 companies, give me a reaction to that.
So my reaction is, for starters, we used to get almost 25 million people a month coming from Facebook to Bleacher Report. Today, 3 million people a month or less. So they used to even be, a larger, much larger source of referral traffic than they are today.
25 to 3.
25 to 3, and really nothing we can do about that. So we're getting it from multiple ends here. But in terms of what that means to me, I fundamentally think that while audience targeting is a good product and advertisers should be spending a bunch of money on it, what audience targeting doesn't do is it doesn't really allow them to sometimes start conversations around their brands or really to influence audience. So I think basically the publishers that survive, and a lot of them won't, are the publishers that can actually shape the behavior of consumers. Like if you don't actually have influence over an audience, I think you're in big trouble. Best case scenario, you're flat.
Got it. John, you build businesses, BuzzFeed, off of Facebook traffic in many ways, right?
Let me tell you about my partners that I love these days. I love my partnership with Sling. I think Sling is the best interface for watching television. I have a partnership with them and a relationship with them. They sell an amazing package of content to end customers, and we're part of a base bundle that everybody gets. And our content is put on their system in every base bundle for every Sling user next to Bloomberg. I love my relationship with Twitter. I think Twitter was always meant to be the home of live content. Finance Twitter is a huge category. Cheddar is a live business news and entertainment network. We're featured on their homepage. People love it. Hundreds and hundreds of thousands of people watch it. We're competitive with a cable network. And we're symbiotic with them. They want to be a leader in live content. The people that supply their live content to cable networks are not allowed to go do deals with Twitter by and large because of their MFNs and relationships with the carriers. And I can do whatever I want to do. You know, business partnerships are like love. If you need love, if you need companionship, you have an amazing relationship. And you love each other, and you have kids, and you have a family, and you grow. If there's no need, if your wife doesn't need love, it's kind of, or husband, it's kind of hard to be in love.
I'm reflected. My only complaint, I love the makeup of this panel in terms of backgrounds and types of companies. My only complaint was there was no woman up here, and now John's talking about relationships and love. So,
I think most business relationships mirror love, dating, marriage, and having children. I really do. I think that as human beings, there really are only a certain set of relationships. I think I'm in a marriage. I think we're in a marriage in a way with Sling and with Twitter.
So Facebook and Google, to extend, any platform of significant power calls quickly, gets you to sign up, get you into the relationship very quickly. Everybody has to be a part of it. Everybody wants to be a part of Facebook Live. Everybody wants to be a part of the next new thing. So what do you see different with new partners?
We've had moments of marriage. You know, Eric Harris is here, who was my right hand at BuzzFeed, and Eric's doing this. Eric and I have had moments of marriage with Google. When Google wanted to launch the YouTube things, we took a grant, we recouped the entire thing, and the entire BuzzFeed business, video business, is a result of two things. That initial marriage with Google, other than 12-year-olds doing selfies. And they look to us, and they look to Vice, and look to other people. I had a meeting with Google yesterday, and I gave them exactly this rationale. They said you should stick a channel. They wanted me to do something, and I'm like, why? That's obviously not going to work. No one's going to look at it. Oh, well, it's great. There's developer tools. I'm like, where do you need something? I know where I need something. Where do you need something? Where we both need something is where the love happens.
Got it. I'm going to skip ahead to the last content company here. How's that relationship working for you?
I agree with most of what John said. I think it's really a euphemism for shared interest, right? And the reason that it's frenemies at best is because the shared interests are largely one-sided. When Facebook or Google or any large platform drifts in the direction of an interest that is of use to publishers, then yes, then it's potentially a good marriage. But those moments are increasingly fleeting.
Yeah.
For the Beast, we have tried very hard over the last few years to wean ourselves off of either brand or renown reliance, and certainly traffic and revenue reliance from Facebook in particular, but platforms at large. So now we're up to about almost 50% of our traffic is direct. And for me, in this whole conversation, part of this is also that publishers, to a large extent, are to blame for the situation that we are in. I think for too long, especially digital journalism companies in particular, which I'm most focused on, we have gone along with the easy scale that Facebook brings or that Google brings, but the reality is you're more renting those audiences than you are owning them, and it's very difficult to transition a Facebook visitor, even if they're semi-frequent visitors to a particular publisher, into a loyal visitor. And if you don't have a loyal visitor, if you don't have a loyal relationship with enough users, you really don't have anything that has any kind of long-term advantage in the market.
Makes sense. Adam, your business must depend in many ways on the open web. Facebook's a closed platform. AMP is Google's new thing for mobile that's quasi-open. They call it open, but they have a lot of control over it. How do you look at the two companies relative to your business?
I have a love-hate relationship with Facebook and Google. I mean, I think that, so interesting, just something to note, I was here last year, and the main metric and KPI we talked about for publishers was monetization, and how we're going to monetize mobile, and what's the best way to monetize the native advertising and things like that. And now we're talking about audiences, the new metric that's really important, and I think a lot of it is because we enjoyed the high of getting all this traffic from all these platforms, and we can't live in a world that if someone wakes up today and changed their mind, our business is no longer here. So I think that these are really, really important times for our industry, all of us, to start thinking about relationship with consumers and how do we get to know their name or email, and that's something that Facebook did an amazing job doing. They got to know 1.5 billion people, and they were able to offer advertisers amazing value for it. And if you think about the open web, I'm actually very optimistic about it, because I think that for an advertiser, and we saw P&G kind of pulling back a little bit on Facebook, and if I'm an advertiser, I actually rather be on The Beast or I'd rather be on Bleacher Report in a trusted, credible environment. The question is, what value can I get for being there? Can I get data that's going to provide value for me? Can I create an experience that's going to create relationship with the consumer? Yeah. So I think there is a big upside for publishers in the open web, assuming we're going to make some changes around how we interact with consumers.
So some of those points I would say are you speaking for publishers' interests. I'm curious from a Taboola perspective. I think of your business, and tell me if I'm being unfair, as a business in which you specialize in putting relevant content in front of audience and getting them to click and go to other content that may be interesting to them. So data collection and targeting and transit of traffic around the open web. That seems to be directly competitive with Google and Facebook. Where you said you have a love-hate relationship. Why do you love them?
I love them because I think they're introducing things that matter to this industry, like value to advertisers, right? So I think Facebook did a really good job proving that if you provide advertisers with something that's worth it, they'll spend more money and they'll scale with you. And I think that's a good thing. And Google showed us that if you buy a pre-roll on YouTube, people will actually see the pre-roll, versus if you render a small pixel-sized video player at the bottom of the right page that nobody sees but people pay for it. That's not a good thing. So I think Google and Facebook introduced that, notions that if you give people value, they'll pay for it. And
Jason, I think he's giving you a bullshit answer, to be honest.
That's my opinion.
I think that we have symbiotic relationship. I think he's just a straight competitor with Google.
Oh no, I'll get to the hate. I'm just talking with the love.
I don't even know why you're saying you love them. They're straight. We have relation. You're their direct competitor.
No, I look at them and I do things for me that I think they're doing good. So I bring it to I do lookalike modeling for Taboola because I think Facebook did a good job doing it. So that's the good. And the bad is that I think they're risking the open web.
Most of the love that pops up with them from competitors is because they're afraid of the two companies, because they have such dominance, right? So they have such control over the industry. The data collection of the two companies across the web is really a lot of the secret sauce that they have. How important is the data piece and your ability to be able to track data across the web?
So I think Taboola now has 1 billion people a month that we see, and we serve 15 billion recommendations every day. We have really good inferred data. We know what you read. So you tell Facebook who you want to be. We know what you read, so we have an opinion about who you actually may be as a person. But we don't know your name and we don't know your email, so we can offer marketers to match an email to your cookie, which Facebook can do.
Okay.
So data is going to be really, really important. And I think actually that's the biggest shift open web should do, which is why should we be okay with people coming to our websites and not signing into anything and not giving us any piece of information? So I think that should be the biggest shift in the next 2 or 3 years.
The argument against that is that information is the consumers and then the publishers they're choosing to use, and everybody else is kind of a troll collecting data. Dave, I'm going to flip back to you. I'm curious. So Bleacher Report, for people that don't know, hopefully I'm describing this right, 10 years ago or so launched. You focused on demand fulfillment, kind of what John's saying. I mean, where is there a distribution point that I can match up with? There were enormously passionate sports fans searching for sports content specific to their teams, and you were better than anyone at matching up content to that audience.
Yep.
Is that fair? And then now you've gone upstream and you have high quality content. You're doing a lot more than just that.
Yep.
If you were launching today, I guess my question to you is, if you were launching today, knowing what you learned 10 years ago, and you build a business against all odds, what would you do now?
Thank you. I think it's a different world. So we exploited supply and demand inefficiencies in the sports content market, basically. There were certain sports events that were way, way saturated in coverage, like the Major League Baseball All-Star Game is the example I always give. Every media outlet in the United States was covering it. Interest was a lot lower at that point than it used to be in like the 1970s and 80s, and there were all these other events or teams that were really badly undercovered. So that's kind of how we built our business. I think since then, a ton of publishers have kind of tried to be comprehensive in that same way. And I think the distribution's changed, content creation tools have changed, the advertising market's changed. So we did shift a couple of years ago and decided that everything we did actually should be premium. So it's premium content, premium audience, premium advertising, most importantly. So, I mean, we're really in the business now of striking partnerships with marketers who actually have problems that we can solve for them, because I think that's where the money is, and that's frankly where the audience is. There's too much content in the marketplace today, whereas back when we were starting, there was a shortage of content. So you have to have content. Basically, we're in the game of creating content to be as productive as possible versus just doing the volume thing. It doesn't work anymore.
Yeah, so John, you've been a student of our industry too, an analyst. And I watch you on CNBC quite a bit. Do you look at that formula of starting out with just creating content and then going upstream, higher quality? Does that work? I mean, reflect on Elite Daily and what you saw.
Well, I have three. We had our board meeting last night, and there are three things that we care about now. One is the content has to be great, and the gets have to be great. On Friday, at Black Friday, we interviewed Terry Lundgren, live broadcast from the floor of Macy's in Herald Square. It was us, ABC, CNN, and CNBC. That's a huge win. We don't even belong to be there, right? We need to do that. We need to get distribution, because if the content can be great and get distribution, or the content can be great and not get distribution. Sling was the first part of that. Twitter was the second part of that. I think we'll be on 2 fully distributed systems in Q1 as well too. And the third part is revenue, and and revenue coming from either carriage fees or from selling our own avails. And that's basically a sort of a spectrum that goes back and forth between each one of those. I think that if you go there's lots of people that have tons of traffic and are unable to monetize. There's lots of people that out-earn and are smaller. For example, what is Vice? What's Vice's monthly uniques?
Well, they roll up a bunch of stuff.
What is it?
I don't know, maybe...
You don't know because no one fucking knows.
Yeah, okay.
And they're the most valuable company, right? So,
it's not a big number.
People dramatically overestimate the audience sizes of every cable network. How many people do you think watch MSNBC concurrently? Or CNBC?
50 to 100,000.
Yeah, it's a few hundred thousand tops for any of these networks. The only outperformer in that category is Fox, which will do 1 million concurrents, and that audience is 70 years old.
Yeah.
I think 67 is the median age.
So
right?
is this because you're in a video space where the numbers are clearer and the quality quotient it's easier to understand quality? Is that what's different here?
There were so many good mentors in this space, and people chose not to study. Look at what Les Moonves does. Look at what Bob Iger does. Look at what Jeff Zucker does. If you create good content, you then need to fight like hell to get neighborhooded.
Yep.
If I get put on a fully distributed cable system next to CNBC, Fox Business, and Bloomberg, I'm going to win in the demo. 100% chance. My content is younger, my cast is younger, my topic coverage area is better. I don't put on old mutual fund managers. You know, it's about getting the neighborhood. And this is stuff, if you read the books about Malone in the 80s and 90s, everybody already knew this. If you put your content on Facebook and I compete against people in bathing suits, we can't win in that environment. They're looking for whatever's going to explode or catch their eye.
Let's pivot on frenemies, because I was talking about Facebook and Google, but yesterday there was more discussion than I expected on net neutrality. You have a merger of AT&T and Time Warner underway. We don't know where that's going to go. Net neutrality, more than likely, is going to get thrown out by the administration. Do you care about that? Because that would seem to be a significant concern to your business.
Net neutrality?
Yeah, whether or not it exists.
I have a very controversial view on net neutrality, and I'm not totally decided. Here's what I think. These people put a lot of money to put fiber and coax all across the country. It's almost baffling to think about what Time Warner and Comcast and these people did.
Okay.
They're losing the notion of the system, the idea of getting the channels on a Gerald box that's in your house is going away. The only way they can make money is off of selling broadband. That's 100% that's 100% of the revenue growth. It's 100% of the margin growth. The cable package is very high margin and in decline. I don't know what's supposed to happen. Netflix just sucking up, what is it, 70% of the bandwidth between 8 and 10 o'clock every night? As an outsider, it seems a little unfair.
They can price that in. I mean, I'm curious. I mean, Cheddar, you're a small emerging company, and you need distribution. You need to be able to get to the consumer, and you don't want gatekeepers that get to decide if your content costs more money to get.
No, I want the gatekeepers because that's why everyone wanted to be on Snapchat Discover. When there's too much choice, people choose nothing, or they choose the worst possible stuff. When there's a selection of choice and it's in an environment that people understand, the best content tends to win.
So it doesn't worry you if Comcast charges you more than CNBC to get the content to the user?
Well, I think I've got much bigger problem. First of all,
Okay,
look, to be honest with you, Comcast Ventures is an investor. I've never had this conversation with Comcast.
Helps.
But no, it actually doesn't help. I would much rather sit down in a room with Comcast and debate how we're going to do this and how the deal is going to work than have some Facebook algorithm that does God knows what and is absolutely volatile and basically favors things exploding and people in bathing suits.
Yep. Okay. Interesting. So back to the algorithms then. I mean, so the quality of the web. Lots of people are talking about the decline of the quality of the web over a number of years. Adam, I'll bring you back in on this. You see a lot of this. You get to be the poster child of the stuff that's probably unfairly thrown your way on the long tail sometimes. What do you see in terms of the algorithms and the ability to improve the quality of the web? Like, what's happening that gets you excited?
So I think at the end of the day, we have two types of recommendations. We recommend publishers' own content and then sponsored content. I think people like Kim Kardashian, and that's just something that people need to. If you like Kim and you click on Kim, you'll see more Kim, and that's gonna bubble up. And then you have people that like other things, but we recommend really all types of content. I don't get excited about any particular type of content.
Okay, so you're neutral.
I don't care personally or as a company, but what I do care is that publishers should have the choice to say, within my site, these are things that I like or I don't like. So I think he may have an opinion within his environment, so we should support that. As a company, I try to not, I'm against censoring or I'm against deciding that this opinion is wrong or good. That's not my job. But what I do have to do is to make sure that publishers have a choice to decide what's a good experience for them, both from a user experience perspective as well as what content gets into that recommended. And I think also users should have a choice as well. So if I clicked on something and I thought that was bad, I should be able. So if I don't like Kim Kardashian and you recommended that to me, I should have a way to get Kim away from the web as I know it. So I should be able to dislike it. So we give publishers' choice, advertisers' choice, users' choice. As a company, we don't take a stance on what's good or bad.
So Mike, I'll set it up this way. Similar question, but there was a great piece that was written last year. Tony Hale, if you know, many of you probably know him, wrote on digital media historically. Your job was to host content, to distribute content, to curate content, that's what a newsroom does, to monetize content, and to create content. Facebook does the first four now. Instant articles, they do the first four. Host, they decide what you get, et cetera. They monetize it much better. All you do is create content then at that point in that world. How do you justify the ISIS story or the stuff that, there's no profit in those stories? Don't you end up being the early BuzzFeed in the early?
I justify it, I guess, by not granting your premise, actually.
Yeah.
I think increasingly what publishers are starting to realize is that we've moved way too far in the direction of simply scaling for scale's sake, as if scale was somehow synonymous with either business health or brand vitality. And we now know, after let's call it 10 years of this project with Facebook and Google and the like, that is not the case. As we were discussing earlier, there are plenty of publishers who are in the single millions or barely double-digit millions uniques who do tens of millions in revenue. Those are fantastic businesses. They're smaller, but they work, right? Where a lot of this, what we're talking about, doesn't work is if you're merely pursuing scale. So for us, what we've always attempted to do, and I think are pretty successful at, is owning all 5 of those things. We intentionally don't do instant articles. We intentionally don't do AMP. We'd rather have our own pages that are just as fast as those implementations and control our own business, control our own users, and control our own data. So for me, when it comes down to your final question about a story about ISIS, there's this old saw that only exists on digital advertising or on the web where brands don't want to be next to news. And I think at various points that has been more or less
They love being
true.
on UGC on Facebook.
Right, exactly. But this is where the quality signal, I think, finally is starting to break through in a way it hasn't. Where you say, and an advertiser will say, yes, it's not merely just about delivering an impression next to anything, use an overused phrase, the context of it actually matters, the quality of the content I'm around actually matters, and increasingly the accuracy of the content that I'm around actually matters. As a result, if you buy into the idea that brands don't want to be near news, you would expect that news publishers would have had their worst years ever in the 2016 cycle. The Beast, for example, had its best year ever. Revenue is up 40%, and we have never been stronger in terms of revenue and in terms of audience. So I think what we're starting to see, and we're actually starting to see it accelerate post-election outcome, is brands again kind of questioning whether there is an actual role for them to play on news sites or news publishers. So we'll see how that goes. But so long as a publisher doesn't buy into your premise, I think there is a potential for them to actually build a business that sustains itself and isn't merely relegated to content production.
Yeah, I hope he's right. And
Can Snapchat be a third power, or?
Oh, definitely. Yeah, definitely.
Yeah.
yeah, but also we saw with Snapchat, also like a month ago they announced that they're not going to share ad revenue with publishers, and so yet again, so I think Snapchat is a great platform and I like it, but it's yet again more of the same in terms of walled garden social environment, that someone makes a decision to change their business model, then you're left with, well, my strategy is hope.
And there was a stat yesterday that somebody was bragging, I think, that Snapchat was going to have $300 million of advertising from WPP. And I think it was Laura Riley from BI here who quickly snapped in, but she jumped in and said Google has $5 billion from WPP a year. So it's a completely different scale. But you think that they could emerge as a legitimate advertising power?
I think they already have. I mean,
not advertising, though. I mean, as actually getting the money in the door.
Yeah.
At that level, or
there's
Twitter.
There's not that many companies that do billions of dollars a year in revenue. What are they supposed to do next year? $1 billion? I mean,
yeah,
right? I mean, that'd be pretty good in year whatever of it,
And why wouldn't they be able to do that? They're going to have the same.
They don't have the data, right? Is that important? I mean, Twitter didn't have the data.
None of the data works. Come on, everyone knows that. None of the data works.
But 65% of digital advertising is bought and sold based on data.
I know, and look where
direct response advertising.
And look where half of it ends up, right? Look where half of those ads end up.
Are Facebook and Google more data companies and kind of modern day data brokers?
That's in some ways the data conversation obfuscates what is actually a fairly simple transaction, right? Google, Facebook, and increasingly Snapchat are about scale.
Yeah.
You go there if you want massive audiences at very low prices, period, right? The larger platforms get, the more they end up in the conversation like this about, well, are they a competitor to Facebook or Google? Snapchat is because it's now massive. If it wasn't as big, we wouldn't be talking about it.
Well, it's not going to be as big as Facebook, though.
No, it won't, but it's big enough to be part of that conversation now, and that seems to be the tipping point in terms of whether we think about other new platforms as competitors is, are they large enough, right? And at the end of the day, that's what's being transacted. And I think John's exactly right. The data is just a way to bring the dollars in the door, justification, but at the end of the day, people are still just buying the scale on those platforms, irrespective of whatever else is happening there.
I think the data is really important, actually. So I disagree with John. I think that if publishers that reach 50 million people had 50 million emails, their enterprise value would be 3x, and they could offer 3x CPMs on their site.
I think the data is rife with false precision, right? The data is like the Labor Bureau stats, except it never gets corrected. You go buy from some random programmatic company or some network, they tell you it did great, and there's no way to check it out. I've used programmatic vendors. It's virtually impossible to diligence that space. It's virtually impossible to diligence where your campaign showed up, and almost 100% of the time, half of your ads ended up running on mega upload. Right? I mean,
Yeah.
And
the advertisers are now looking into this, but it's a matter of when they start spending differently.
I can honestly say, talking my own book, I would never do a programmatic advertising buy. I would never ever do it if I was an advertiser. Someday I probably will be involved in having a large marketing budget. I don't see why I would do anything other than Facebook, Google, maybe Snapchat, and then pick a few publishers that are doing something I want to do. And if I can go to Finocchio and I can say, look, this is what I would pay on some random ad network, I'll pay you a bit more, and here's all the stuff that I want, and when it doesn't work, I'm going to call you up, and I'm going to tell you how unhappy I am about it. That's so much better than it just going into some machine where it goes God knows where. If it worked, it'd be one thing, but it never works.
The automation's fine, it's just the way it works right now. You have no idea where your money's going and what you're getting in return.
I mean, how many articles do people have to read in the Wall Street Journal and business? I mean, how many times do people have to get burned by these programmatic buys? Look, thank God the stock market finally corrected these companies. And it has basically said now these companies are worth nothing.
Yeah. Okay, I think we need to wrap here. Please give a round of applause for our guests. Thank you. Okay.
So we've been hearing the name Facebook come up a lot in the last hour, so let's give them a chance to weigh in. Next up, we have Andrew Bosworth, who actually went to Harvard with Zuckerberg. So he's been at Facebook long before it was a household name. So please welcome Boz and Lara back to the stage.
Thank you, Barbara. Good morning.
Good morning.
And thank you for welcoming Boz. Thanks for coming. Thanks for being with us at Ignition. So, as we were just hearing, you first met Mark Zuckerberg, when you were his teacher back at Harvard. And then 2 years later, he decided that he wanted to flip the tables, and now he's your boss.
Yeah, no, and how lucky for me. Really, they were coming up against this problem in 2005 where they didn't know how to build any artificial intelligence systems. Now, I wasn't exactly a world expert. I had an undergraduate degree, but I was his teaching fellow in artificial intelligence. So I think when the recruiter asked him, like, do you know anybody that knows anything about AI? He's like, this one guy. How lucky for me.
And so since then, you've launched some major products with Facebook, most famously the news feed, but you've done the messaging system, you've been part of building out the kind of back-end infrastructure, profiles, timeline. And then, so 4 years ago, you took on this new role as VP of Ads and Business Platform.
That's right.
Which sounds both grammatically incorrect and confusing. So yeah. What is that role?
Yeah, so 4 years ago, I started working on the ad system, that's right. And at the time, it's ads, kind of as people have been discussing today, and I think that's well understood. We've recently, the last year, added this business platform tack on, which is something actually I'm really excited about, which is there's tools on Facebook today that people know about that fit under that umbrella, things like Pages, things like Events, our developer platform, our games platform, and our new marketplace product. More broadly, though, trying to make Facebook more useful to people on a daily basis, not just in terms of discovery and finding content and finding connections, but also in terms of really solving real problems for you. So you want to buy something, you want to connect to a small business, you're physically navigating the world, and you want to use Facebook to help you physically navigate that world. So I think that's a piece of work that we're just starting really this year, and I think is going to be a much bigger part of what you'll hear from Facebook over the next several years.
Okay. So a lot of people use Facebook to discover news. So let's tackle this one then, fake news. So you call it false news internally, I've heard. Someone told me the other day. I'm not sure if that's true. Or who knows? that's the whole problem we're dealing with, right? Who knows what's true anymore? So let's tackle this elephant in the room then. So firstly, some people are saying that fake news on Facebook could have swung the US election. So, I mean, does that seem kind of outlandish? And also, what are you doing? What is there that you can do as a platform to solve this problem? What have you done so far?
Yeah, I mean, I think Mark Zuckerberg really said this best. You know, we don't think that fake news swung the election, but we do take it very seriously. It's something that we're working on and dedicated to. And as Mark said, actually in a recent post, you know, we have taken a number of steps right now: third-party verification, making it easier to do reporting, stronger detection, those types of techniques. And they're not all going to work, but we're going to kind of stay at it with that. So we think, you know, nobody wants to see hoaxes on Facebook. We don't want to see that either. So we're taking it very seriously.
And what are you kind of not doing? So those are the steps that you are taking. What are you making sure that you stay completely out of?
You know, when we do our work at Facebook, we tend to just really start with what we think are the best ideas, and you kind of make progress on those. And then if they work, then you reassess. If they don't work, you reassess. So I don't know what is the entire scope of what's possible. I can tell you, Mark detailed, I think, very well in his recent post the specific work that we are taking on first. We think it's the biggest opportunity.
Can you run through some of the specific things that you're doing?
Sure. Yeah. I mean, you've got easier reporting. Can we make it easier for people to report that this content either is fake or seems fake or doesn't resonate? Can we have stronger detection, automatic detection based on machine learning to try to identify something that may be more opinion or something that may be different? Can we do something in the user interface to kind of more transparently demonstrate one thing or another thing? So really, again, I think I hate to do it, but Mark Zuckerberg's post on this on Facebook is probably the definitive source of the work that we're doing.
Okay, so back to you then, perhaps, and how you view this situation. So, as I mentioned, back in kind of 10 years ago when you first invented the news feed.
Yeah.
So did you ever foresee that this could be an issue? Because the whole idea was that you could basically, rather than having to click around people's profiles to see what they were doing, you had one landing spot to be able to find out what was going on in your world right now with your friends. Did fake news even occur to you at this time?
Yeah, no, when we built Facebook newsfeed, we really were solving a very specific problem, which is that people wanted to connect with their friends and family, as you outlined back in 2006. That was a laborious process. It involved loading profile by profile and trying to remember what had changed. And newsfeed was a great solution to that problem, and has scaled really wonderfully with the community. But today, even still, controversy aside, the vast majority of what people are spending their time on in newsfeed is still connecting with friends and family, and it's still the overwhelming majority of content and time people are spending is connecting with the people and loved ones they care about. And so that really is the main reason that newsfeed exists. It continues to be the main reason newsfeed exists. So I think as always with Facebook, we really respond to what the consumer problems are that they're facing in that moment, and then try to build better tools from there and take responsibility for that. So there's been a number of things that have changed in terms of the dynamics and the distribution around newsfeed and content, and this is one that we're taking seriously, but I think is very much in the scope of what we've done before with newsfeed.
Sure. And so another thing that's kept Facebook in the news recently, I will move on to the positive side soon, but just one other thing I want to tackle first, so measurement.
Yeah.
So back in, I think it was September, you admitted that you'd overstated some of your video metrics.
Yep.
They weren't billable metrics for advertisers, but nonetheless, it was a bug.
Yeah.
And then a couple of weeks ago, you put out a blog post saying there were a few other errors, and in some places we overstated, in some places we understated, but here's what went wrong and here's what we're doing. You've added lots of extra third-party metrics, third-party measurement firms that advertisers can use to measure the effectiveness of Facebook. You've got a measurement council that you've launched, so you're taking on kind of members of the industry experts to give you feedback about what you're doing well, what you're not. Yet every time I talk to ad buyers, they always say, if I say, what's the one thing you'd like Facebook to improve? And it's measurement and data, and the words kind of walled garden and black box get thrown up against you. But given everything that I've mentioned, what more can you do to convince these people?
Yeah, well, I think there's two parts to this. I mean, one of which is, most importantly, when people are connecting with friends and family on Facebook, they're really trusting us with their personal information. And we take that as our primary responsibility. It's something that we're completely inflexible on, is making sure that we're protecting the private information of the people who are using our service. And so that's a fundamental limitation that we have in terms of how much we can be open and transparent with all the data happening in the system. So if you moving beyond that limitation, we obviously want to make sure that marketers have, and content producers and publishers understand their audiences, understand how their content is performing, understand how things are pricing. And so we provide a huge suite. We work a lot to make sure we have great first-party measurement tools, first-party data, first-party insight tools that we can give to people. And we are more than happy to have third parties help validate and verify those tools if for those publishers or for those advertisers who want a little extra peace of mind. And we're happy to work with Nielsen or Moat or any number of other kind of these third-party integrations that we have for people to verify the numbers. So those are the two pieces of it. We want to give as much as we possibly can, but always with that limitation that we do have a commitment to our users that we hold sacrosanct.
But the issue that they have is that they don't have one kind of universal metric that they can use to buy ads on Facebook and Google and then measure those back. There's not a simple kind of a ComScore measurement that they can use. It's different even when you work with a third party like Moat, for example. You receive kind of special Moat, like special Facebook Moat data back that's kind of different from what you get from Facebook. They can't put their tags on it, basically. That's what they're pissed off about. So why can't you just let them do that? What's holding you back from going that far and just saying, okay, see all our data?
Well, that's what's interesting about it is, people being able to attach tags, for example, is exactly the type of data leakage that frankly represents a real risk to the security of the information that our users are trusting us with. And that's we're not trying to be obstinate, we're not trying to be obstructionist in that. I think that's something that's honestly a commitment that we have. That's the nature of the platform. The platform can't exist without that commitment that we have given to people. But again, I obviously think that beyond that, we are giving marketers the tools that they need to measure and iterate and get better on the platform. We're committed to always doing more and more. The Measurement Council will be a huge help there. And I do think, thinking forward towards the future, is there more that we can do to create standards that maybe aren't perfect? Because keep in mind, these platforms are different. I mean, as much as we wish that a YouTube and a Snapchat and a Facebook video were all just interchangeable, they're not. They're different platforms. They have different consumer behaviors. Trying to pretend that they're the same platform may be a convenient
good for media buyers looking at a media plan, but not for
well, it's good until it's not.
life.
It looks good. It makes life easier, but does it actually help them provide the best content? Is it going to be the best return on their investment? Maybe not. So I think there's a degree to which we need to recognize that different platforms are different, even if some of the pieces look similar. But having said that, I think certainly on things like what's an impression, who's a real person, I think we can make real progress as an industry. And I really hope that working with our Measurement Council that we've just announced will help us make real progress there.
And what's an impression on Facebook?
So for us, an impression is something that is seen by a real person. So that means it has to enter the view screen. It has to have been there for more than 0 seconds and has to be a human on the other side of it.
That's an important point. More than 0 seconds. Is it 1 second, 3?
More than 0.
Okay.
No, seriously, more than. Well, you'd think this would be not controversial in the industry that we work in. More than 0 pixels, more than 0 seconds. Very good place to start for what's an impression. That is not a universally held opinion of what's an impression.
But that's lower than the standard.
Some people have a standard that's higher than that. A lot of places that people in this room maybe are buying have a standard that's lower than that, and you should look into that.
So let's move on. So as we kind of mentioned earlier, you're very much a kind of product guy. You've been part of lots of really exciting product launches. Where do you think Facebook can innovate next? We just heard from Mark from RBC Capital Markets, and he was talking about the kind of opportunity. Facebook only represents right now 5% of global ad spend. So there's clearly there's a big market there for you to bite into. So what next? What are you excited about?
Yeah, well, actually, kind of to some degree in reference to one of his points, I think Facebook has a wonderful opportunity to continue to grow in the space of attention. People are spending a lot of time on the platform. More and more mobile devices are one of the primary ways that people are consuming content, and Facebook is one of the kind of principal players in that market ecosystem. But more than that, I'll talk a little bit about the other side of it, which is this business platform or this local opportunity. There is a real. It's amazing to me that we're 10 years into having mobile phones kind of with us all the time, and when I'm in New York just for the couple days here, I'm trying to find a restaurant. And I'm going to one app to see what restaurants exist near me. I'm going to another app to get reviews and ask people which one I should go to. I'm going to a third app to get a booking, but the one I want isn't in that app, so I'm going. These are little things, but on a daily basis, these things compound. People are every day going to get coffee. People are every week going to a hair salon, obviously. People are. I don't know how often you get haircuts. I'll be honest with you guys.
You're keeping it trim.
Yeah. So people, these really cool daily things where they're a real part of our daily life. They're a real part of the connection that we have to the community and the people around us. A lot of these things are very social. Going to salon with friends, going to dinner, going to lunch with friends, going out to an event, a concert that's in town that I didn't know about. I'm at a store. I'm trying to buy a coffee maker for a friend. I'm looking at 2 coffee makers. I have a friend who owns each of them, and they've written about what they liked and didn't like, and I can't get all these little pieces that they're not connected yet. They're not tight. And I would like Facebook to and I think we have an opportunity from a product standpoint to help people with these little daily annoyances that really add up over time. And that ultimately amount to a stronger connection to a local community, whether that be a community of friends that they're spending time with in the real world, which is a huge goal for us, or there be the local businesses. And those can be small or they can be large businesses, but that every day those are real parts of the graph of connectivity that I have, and it's not really well represented or handled by Facebook today. So that's a set of work that we're really starting on this year, and I think we've got some features already launched around that, around event ticketing and a few things. But I think over the next couple of years, that's going to be a really major focus for us. And if we start to be a place that people can get things done and really solve some real problems in their daily lives, you really open up a tremendous opportunity for businesses of all size to connect in a much deeper way.
You've just described Yelp.
I think there's a little more to it than just that. I mean, for example, discovery is a huge part of this behavior. For Facebook, people who right now, I use this example, but it's a real one. This is a bit of an embarrassing one, maybe, I don't know. Beyonce concert was in town. I knew about the first one. That was great. That was announced at the Super Bowl. She came back, did another tour, found out in newsfeed. That's a tremendous success for me. I wasn't looking for it. I wasn't like, let me go browse and see what concerts are out there. So discovery is a huge opportunity that Facebook already plays in this space. We already have newsfeed. We have that attention. Can you move from discovery then to helping with decision and then ultimately also connection? Can I actually purchase the ticket right now, or do I have to go someplace else? Or on mobile devices, am I really going to go enter my credit card on this mobile device right now? Maybe not. Maybe I'll go back to my desktop. Do I forget? Do I remember to do it later? I think being able to make this end-to-end flow of discover, decide, and connect really seamless is a huge opportunity that's a little bit unlike any one thing in the marketplace, any single app. And I think the fact right now that it's in multiple apps is part of the problem.
So to pick that apart then, so the Beyonce ticket example, you could use maybe AI to detect that your friend was talking about the Beyonce concert that's coming up in September in
Yes.
New York, and there would be a button to buy now within the Facebook app.
And ideally buy tickets next to my friend.
Right, interesting. So keeping on that AI theme then, and talking about, I want to know how you choose which products to work on. So you just said you're the undergrad AI expert. So do you use things like machine learning and AI to work out what products to go on next? Do you just do the kind of the market research focus group? Is it just a punt on people will like this, whether they like it or not?
No.
Or whether they know they will like it or not?
Yeah, I'm glad you're asking. And the product development process is something that I think is probably one of the most systematically misunderstood parts of Facebook's process. I mean, I think people, maybe because of watching the Steve Jobs movie or this and that, think that a bunch of smart people go in a dark room and just like think super hard, just really think. I was really thinking. And then the idea comes and we just go, I have it. No, it's not really like that. I mean, I think people really try to solve basic problems that people have in their lives. We talked about newsfeed earlier. I think Mark will tell the same story about why he created Facebook in the first place. It wasn't that he thought this was going to be the biggest thing in the world. It was just it solved a real problem that he saw people having around him. Maybe my favorite example recently is Live. Facebook Live was a thing that was built with the idea that it would be a cool additional feature. It'd be maybe a niche thing, but we launched it and it was way more popular on day 2 than we really had anticipated. And so we internally allocate more. And we've been launching.
Wasn't there some Facebook engineering in that as well, though? You're paying publishers to produce live video, and it looks like the algorithm favors live video. You get notifications telling you your friends have gone live. Isn't that why it's popular?
I think there's a causality question that we ask in these things. I think Facebook operates a lot of times with holdouts to try to understand. We do A/B testing, I think very common in the industry, to understand what's really driving, what's cause, and what's effect. In this case, really Live was way more popular without a huge amount of extra work than we expected. And so then we go and spend a lot more time investing in it. And we've grown 4x over the course of the year in terms of the volume. A huge amount of the growth, as much as we tend to focus on these head publishers with big live streams, the majority of live streams aren't that. They are friends and family going live. And so I think we're still adapting. It's still growing, still brand new. But this is another example of we don't start with this idea. We start with what are consumers doing, what are they enjoying, what are they trying to do and failing at, and then we build from there.
So keeping on the publisher theme then, and we've just had a panel of publishers talking about how they work with Facebook and Google, and I imagine a lot of people in the room work with Facebook as well. How could you, or how would you describe the kind of Facebook-publisher relationship? The word frenemy gets used quite often, and there's this weird balance,
We
right?
don't use the word frenemy.
Well, Martin Sorrell uses the word frenemy, so lots of people use it as a result. So you've got this weird balance. We're getting a lot of traffic from Facebook, which we're very thankful for. Thanks very much. But at the same time, we're scared of going down this Facebook rabbit hole where we're giving out too much of our data, and it's kind of like a tax on our audience almost. We want to keep them on our own platforms. So how do you kind of strike the right balance there to say we're here to help you? Because also at the same time, you need our content as well. That keeps people on Facebook. That keeps the eyeballs there.
Yeah. No. I mean, so. We start in a very simple place. We're trying to build the best experience for the people using our product. And insofar as that's what publishers are doing as well, our interests are very aligned. So you think about something like Instant Articles, which is just it's a better experience. It loads a lot faster. And we didn't build that out of anything other than identifying that one of the main things we saw people doing would be clicking on a link in Newsfeed, waiting for the site to load. It never loads. They don't give it that long. They give it like a second and a half, and then they bail back. Which meant that's bad for publishers, that's bad for us, that's bad for the user, that's bad for everybody. So we can, in these areas where we find, we all want the same thing. We want to have people engage with the content without any friction. We want the best content to win and for that to be what gets out there. That's a responsibility we take very seriously. It's something we want to partner with publishers on. That's the spirit within which we undertake all of our work in the space, is to just provide the best experience for people trying to consume content.
Great. Well, it looks like we're right out of time, so everybody give a big hand for Boz.
Thanks, everybody.
Thanks very much, guys. Cheers, Boz.
So now we're going to take a short coffee break and be back in this room at 11:05. And when we come back, we're going to switch gears, and I'm going to present to you on chatbots.
Ladies and gentlemen, our program is about to begin. Please take your seats. Ladies and gentlemen, our program is about to begin. Please take your seats. Ladies and gentlemen, Please welcome the Vice President of Research for BI Intelligence, Barbara Pang.
Hi, I was your MC this morning, but we're going to switch gears, and now I'm going to present to you on chatbots. Chatbots have been getting a lot of buzz this year, and that's due to recent advancements in AI and Facebook's announcement earlier this year. And we've seen a spike and an increase in people searching for chatbots on Google. So just like any other buzzword in digital, people are trying to figure out what chatbots are and what their value is going to be. So I'm going to do two things in this presentation. I'm going to explain what chatbots are, walk through an example, and then I'm going to talk about an opportunity that they have in commerce. So first, what is a chatbot? A chatbot is a piece of technology that mimics human conversation, human interaction by text. There are a lot of applications for this technology, but a really clear one is service. So let's think about a spectrum of service. On one end, you have an automated telephone prompt. This is like when you call your bank and it says, press 1 for customer service, press 2 for billing, et cetera, et cetera. On the other end of the spectrum is a human, is a concierge at a 5-star hotel. And this person can pretty much get you anything. But in addition, they can solve your really complex problems in the moment. So chatbots fall on the spectrum much closer to the automated prompt side of things, but they're better. The automated prompt can only take a limited number of inputs and is very rigid. Chatbots, they can ask you clarifying questions. You can ask the chatbot questions. And people are excited about chatbots, not necessarily for where they are right now, but for where they can go. Because as they get better, they can handle more complex problems. And in addition, they can do that while leveraging the power of digital. So let's walk through a really simple example. Fandango has a chatbot. It says, hi, Barbara, here are some options. I want to see the movies. I want to go to the movies. And then the chatbot brings me back options that are playing close to me. I look through the options. There's not what I'm looking for. So I text the chatbot, what about something for the family? And the chatbot brings me back Moana, an animated film. Looks great. Looks great. And they send me options for when it's playing. And I can pay right there in the conversation. That was a really simple interaction, but really effective. It was a mix of menus, and it was able to handle a text that I would send to my friend. So Fandango is not the only company getting in on this. There are tons of companies that are getting in on the chatbot ecosystem. And to understand why they are, you need to understand where chatbots live. Chatbots live in messaging apps, and messaging apps have enormous reach. Actually, in the last year, they eclipsed social apps in number of active users. So that is a lot of eyeballs. And these eyeballs are engaged. People are opening up messaging apps 9 times a day to text their friends. So what do you have when you have a lot of eyeballs and you have a lot of activity? A commerce opportunity. So chatbots have potential in commerce, and there's 3 very quick reasons why. So first off, they shop for you. You don't have to go anywhere, and they're searching for you and bringing you things. Second, they're not just searching for you. They're curating items based on your tastes. They get to know you, and they remember that information. Third, they make checkout really easy. So instead of me typing in my address or my billing information, they just remember. And I can literally check out right there in the conversation. So there's potential for chatbots in commerce. But where are we right now? Are people using chatbots? They are. An overwhelming majority of people are using chatbots. And it's not just millennials. It's generation agnostic. And in addition, chatbots are really sticky. So this isn't a one-off interaction. People are coming back. Like I said, we're in early days, but the experience right now is good enough for people to come back to. So imagine what the potential could be. Thank you.
Hi again, everyone. So, bots. Alex, how about you kick us off? So this year was probably the first year in history that people found out about an election result via a bot. And I mean this literally. Your CEO, Ted, so Kik's CEO, told me on the morning of the election, he woke up and he used the CNN chatbot to ask how the polls were doing and found out that Trump was the victor. So that's kind of amazing. So run me through the kind of genesis of what CNN has been doing with bots, kind of why you decided that this would, for a media company, this would be something you wanted to experiment with.
I think there's been a confluence of events, right? So you look at even the business intelligence numbers of 3 billion individuals on a monthly basis using messaging, tens of millions of people using voice activation. And so it's an important platform. And in some of these, I think in the previous sessions talked about these kind of one in all platforms, right? Some people are living inside WeChat, right? There is no other app. They're all, it's an ecosystem. And so if you're living in this space, it's more important than ever that that news plays a role. So for us to be the worldwide leader in mobile and video news and information, we actually have to play in that space. I think that event, adding in kind of what chatbots promise, it's very early days and we're experimenting, but I would say that when you look at what chatbots can do, what's exciting is that they can be very personal and intimate, right? They can sit right alongside your friends and family as you message. Or talk to them. And then they can be scale, right? They can reach many different people with this kind of broad message, which CNN does. So for us, it's still very experimental, but I think for us, we see it as an opportunity to deliver news real time in a very personal way. And so I think that's what's been really exciting about this. So we've really experimented, we can talk a little bit more about it, on different platforms trying different things.
And do you have a dedicated team that works just specifically on bots, or are they your kind of experimental team that work on lots of different things?
We do. You know, there's different pieces to it, right? There's the technology and product group that is doing either emerging platforms or new platforms. Then there's the actual programming and social team that's looking at identifying content, distributing that content, and shaping it. I think more important than ever, and I know this is a very popular topic, but just whether you agree that you need to be a destination or a distributed brand, if you're going to be both, you have to be authentic on all those platforms. And so we don't believe we should just take a 30-second clip with a 30-second ad and put that on every single platform that appeared on television. What we've done is evolve that over time, and now we're on dozens of platforms, and we try to not only create the right content, but program it on those platforms.
Sure. So Mike, talk to me about where Kik fits into this conversation. So Kik, for those that don't know, it's a messaging app. So you have a kind of bot ecosystem. Do you create your own bots? How does it work?
Yeah, so Kik we build a chat platform where bots like CNN live. It's interesting, whenever I sit on panels, I'm usually not talking to 13 to 19-year-olds, so I have to explain what Kik is. So when a bot like CNN is looking to engage with the teen audience, which is usually one it's a little harder to get access to, they come to Kik, where basically 1 in 3 of every teens in 13 to 19 spends their day. And what's sort of interesting with that in particular is that when you're talking about all these different platforms and how they serve different audiences, with Kik, what that means is that this audience in particular is spending all their time here. They're the ones who are chat native, right? Teenagers are growing up, they don't use email, they never had a desktop, they've jumped straight onto their mobile phone. This is where they engage and they spend all their time. So it makes sense that we're talking about chat as the way to reach that audience now. It's no longer going to be interstitial video ads, they're not watching television. How do you get access to this audience? How do you get your message out there? So chatbots are the chat native way that users sort of already understand. And Kik builds a platform where those bots live.
Got it. And now, Dennis, you don't use chat platforms at all. Kind of introduce the audience to what you do and introduce Amy Ingram to our audience.
Sure. So me and my 92 Propellerhead friends have spent the last 3 years trying to create this intelligent agent that can do this one particular job of setting up a meeting. So we're the opposite of a platform, but a highly specialized agent for where when you want to meet up with me, you can shoot me an email and say, hey, Dennis, I'm in Manhattan in February. Do you got time for a cup of coffee? And I can reply back and say, yeah, I'm up for that. I've CC'd in Amy and she can help put something on my calendar. It is now her job to understand exactly what I asked her to do for me, remove me from the conversation, and have this very natural, human-like negotiation with you on exactly when, where, what time, for how long, and understand once concluded that you've agreed, and then send out an invite. And there's nothing new or magical about that. You can buy this product today already, and it's called the Human Personal Assistant. It'll cost you $80K plus overhead in Manhattan, and that's fine. It's just that not everybody really have a cost setting where they are allowed to do so. So we're trying to kind of democratize access to that type of assistant. And that's been super interesting, and we're hyper-focused on this one pain point. And it doesn't exist as an app or an extension or plugin or website or Tungle Me or Doodle Me. Her only interface is that email address. That's the only way you can communicate with him or her. So Amy and or Andrew.
And they just basically take out the kind of ping pong that goes between, are you free on Friday? No, I'm not. How about Thursday? Where do you want to meet? That kind of thing.
So the best setting is obviously one for where, I CC in Amy, then I'm happy. You still have to speak to my assistant back and forth. My assistant is, super diligent, works 24/7, responds rapidly, understands all the time zones, and so on and so forth. So you'll have that conversation. The best case scenario is that you reply back and say, hey, lovely, I've CC'd in Andrew on my end, and he can hash it out with Amy. But if Andrew is Amy...
So you've got two bots talking to each other.
Who the hell is she talking to, right? She's talking to herself, and then you get this kind of very interesting network effect for where it's probably going to be a single agent market, and I'm trying to race towards that point for where I can win that market.
Okay, so that brings us on quite nicely to the next question then. So I'm interested in discovery. So this is a niche ecosystem at the moment, but one that's spread across lots of different platforms. We've got the myriad of kind of chat apps, but then also we've got bots like Amy Ingram and the stuff that you're doing that doesn't exist within a chat app at all. So looking at the kind of ecosystem more generally, how's discovery going to play out? Is it going to be search? Will there be a kind of app store for bots? How do you guys think it'll work?
I'm obviously super fucking biased, but I just don't see a future for where I take out my phone and today I have 120 some odd apps on it, and in 6 years I'll have 240 apps. That doesn't feel like the future to me. So if it's not more apps on my phone, what is it? And I think that future is one for where we'll end up having a whole host of intelligent agents doing little chores that we don't want to do, whether that be something as simple as getting the news or submitting my receipts or setting up my meetings or any number of other things. And I think the discovery is something where you'll be exposed on need, right? So if I stay at the Hilton and it's 11 p.m., my first thought is not one, if I want a Diet Coke, yeah, I should go to the App Store, find the Hilton app, download it, install it, set up a set of credentials, log in, find the Diet Coke, add it to my basket, add my credit card, check out. It's like, fuck that. I died before I get that Diet Coke. What I want is a big-ass phone number on the door or some voice-enabled room,
You could just
Alexa
go and get
style.
it yourself.
I just want to text and say, hey, can you bring me a Diet Coke to room 1920? You figure it out. I actually don't care how they figure it out. I just want my Diet Coke. So I think there's some setting for where the app is just so disconnected to my need that that can't be the future.
Yeah.
So I think that discovery sometimes it's nothing but font size 140 on the front door of my hotel room, which I can text with whatever need I have. Or even better, which I think is much more likely in that scenario, some voice-enabled setting for where it'll be silly if you can't speak to your hotel room Alexa style in 4 years from now. I'll just shout to my room in my underwear, Diet Coke. And then in 4 minutes...
Do you need a drink? Is it
ding dong, a Diet Coke arrives, right? I think that's discovery. Discovery is not Yahoo-style lists or Google-style search. I think it's exposure on need.
But I'm guessing, Mike, you probably think differently because you're a platform owner, so you want to keep people within Kik, and they discover through Kik.
Well, I think we're actually pretty well in agreement on this point because I think that discovery is going to happen on a needs basis. It's going to happen out in the public spaces all around you. So definitely for private spaces where you're in your room, you want your Diet Coke, talking to an Alexa doesn't feel so weird. But when you're out in a public space, if you're walking around the Time Warner Center, I don't exactly feel like yelling at the front door of a Sephora. So there's going to have to be some way to interact there. And we think that's the Kik code is sort of one of the ways to do that. So, you pull out your phone, you swipe down, you scan that code, you pop into the conversation with Sephora, and now you're engaged with that bot in particular.
So the code is what, like a QR code type thing, or?
We don't really like QR codes, that's why we invented these things, but yeah.
So what are they?
It's a scan code, so you pull out your Kik,
Okay.
you scan with that, and that pulls you into the conversation. The problem with QR codes is that anytime you scan a QR code, you end up getting subscribe to some email list or push it to some advertising website. You don't really want to do that. So you scan a Kik code, you hop in the chat, you're chatting with Sephora. Now you can get answers to what's on sale at the location I just scanned. You can get updates for all the latest trends that are going on. You can share that with your friends. I'm not, exactly like you said, I'm not going to spend the 3 minutes and the 30 megabytes on my phone to go download an app from the App Store. I'm going to instantly connect with that bot that's already there, and in the app where teens are spending 74 minutes a day. You don't want them spending 30 seconds in your app and then forgetting about it on your home screen.
Yeah, I would. I love what you guys are both saying too, and I don't think anyone cares really about bots or chat bots. I think it's a fascinating way for us to kind of shape the conversation. But I think you're absolutely right. I think it's something that's in the background, that's frictionless. I think the discovery, voice is really compelling in this way. I think ecosystems like Kik, which we have great success and we've learned a ton, are places where it just kind of works. The most important thing is that it's not a gimmick, that it's actually solving a need. And so the first thing is, and I think that's what's kind of extraordinary what you're doing is, so you have just precise focus and you're crisp about exactly the need you're trying to solve. Then comes the real journey, which is how do you just smooth out that experience? And we all have a visceral reaction to the telephone trees, right? I think as good as they become, and you immediately, I think, recoil when you realize that you're going to have this conversation. So what's really nice is that I think with voice you can start the conversation, and actually Amazon Alexa has come a long ways, and it's pretty responsive, and I think Google is on its way. And then on the messaging side of things, I think we have a long ways to go, but it's all the same problem that you're trying to solve. So for example, and this is only an experiment, and you should try it and see what you think. But so the way it should work is that when you go to Amazon Alexa, for example, you can say, hey, give me the news. And then they could say, well, that CNN can give you the news. And so then right now you can just say enable CNN. But what we've done is we are tracking every single story in real time on television, right? And we're tagging every single one of those stories in real time and turning around the audio so that if you ask a question, you say, ask CNN for the latest on Trump, ask CNN for the latest on Pizzagate, on Mosul, on ISIS. We will return the segment that aired within the last 5 minutes. And you'll hear Anderson Cooper, you'll hear Christian Amanpour, you'll hear Wolf Blitzer respond to the question that you've asked. Now look, it's early, but that's I think more of the spirit in which we're trying to get to is, I heard about this, if people still have dinner parties, at a dinner party or on the way, what's the deal with X? And then for us to understand your context, intuit the problem, and really make it be able to do the natural language to be able to kind of translate what you're really asking. Those are the best kind of experiences.
So bots are clearly kind of becoming more sophisticated, and even though there is quite a long way to go, we're already seeing, particularly on platforms like WeChat, people are transacting, in China at least, millions of dollars just using bots alone. But as bots become more kind of sophisticated and people are typing in more information or speaking more information into these bots, there's obviously the potential for sabotage, and we saw it with things like, Microsoft's Hey, the kind of racist bots, but then also there's the more, which was kind of a silly example, but then when you're putting in your credit card information, when you're sitting in a hotel room in your underwear, and how much is it listening? What else could it hear? What else could it see? That kind of thing. Who's going to be in charge of kind of keeping these bots in check, making sure they don't become too smart, making sure they don't kind of take over in that kind of dystopian way?
So we're certainly old enough, sadly, to have some memory of the challenge when people started to bring their own devices into work. Today, December 2016, I just assume all my employees have their email account, their calendar, company files somehow synchronized to their personal devices. that's assumed. I do think there'll be some near-term future where there'll be a similar setting we can call a bring your own agent, for where I assume you personally will employ X number of agents, whether that be to set up your meetings or do any number of other things if you're a sales rep or a recruiter, and you will train them over the years and move them along from one job to the next. And it will seem almost silly if I want to hire you and you come in and tell me, no, I do my own receipts, I set up my own meetings, I do all these things myself. That would seem almost eccentric, as in, I'm not paying you 120K to do that. I'm paying you 120K to do this. So I think this new bring your own agent setting, whatever that will be called when we get there, that's what we are racing towards. And if that's the setting, then I think it's your responsibility and not necessarily the company's. The company will try to force some reasonable framework, but that haven't worked on the bring your own device generation. So my iPhone is just as secure as I've set it up, not as secure as the company set it up. And probably the same with yours. However wonderful an organization CNN might be, it is no more secure than you leaving it open when you go to the loo at Starbucks. And that's that. So that, I think, is something that's going to end up being replicated from what we've seen in the last decade.
And what about a platform like Kik, though? You must have, particularly if you've got teen users, you've got to take some responsibility for what the bots are doing and do some sort of curation there.
Absolutely. And I think it's important to realize that teenagers are extremely savvy when it comes to their messaging. They understand social networks better than, probably anyone in this room understands them. They understand them at an innate level. What we have to do as a platform is we have to build the tools that let them actually control what they're getting out there. So when you're on Kik, you're identified by your username, not your phone number. You're not giving out all that private information. You get to decide what your persona is. But when it comes to bots, we have to do a little bit more, right? If you're going to be transacting on a platform, you have to be careful about what bot you're interacting with. If a bot just messages you and says, hey, can I have your credit card number? Don't type it into the text box and send it back to them. It's probably some random guy, who wants your credit card information. What a chat platform can do is provide you with unique interface that you trust, an area that centralizes that information so that when you need to transact, we have that information on file. We can actually do all of the back-end security that actually makes that a trustworthy transaction and complete that transaction on your behalf. So it puts you in control of where your data is, but also gives you a unique way to present that data to the person you're interacting with. So it's not just, I think that's where text messaging is sort of a little bit too low fidelity, and you've got to upgrade the quality of that engagement up onto a chat platform.
And as a brand, who are you relying on to keep not only your users safe, but your brand safe? And does some of that responsibility, again, does that fall back to the kind of developers like you?
I want to make sure I answer the question because it could implicate a lot of things. I mean, I think that the problems with chatbots are probably not entirely too unique to the security that we have around our reporting, our email, the way we communicate with one another, even through satellite and television. And so I think the nuance is that the better the chatbots get and the more human they feel, the more likely someone is to be convinced otherwise. We've all gotten the email scams, and we can spot them from a mile away, but some of them have gotten better and better. They identify one of your more popular addresses in your box, your inbox, and so on and so forth. So that you're absolutely right that if we can get the fidelity at the right level, then people will absolutely violate that trust. I think for us, more importantly, is the BD relationship we do. We may do some forms of chatbots, but our for the most part, and eventually if we get into e-commerce, that'll be different. But for the most part, our transactions are more about giving them reliable news that they know is coming from the right resource. And so the BD relationships that we have, or making sure that we enforce the brand across the globe, so people know if it says CNN on it, it's really CNN.
Sure. So we've got about 5 minutes left. I want to end on a kind of forward-looking note. So we've been talking, this whole conference is about the future of digital and particularly digital media. And in that place, in that space, there's two clear winners. There's Google and Facebook that are taking kind of 100% of growth out of the market. The bot world seems a lot more fragmented, especially in the kind of US right now. So looking forward, as these bots become more sophisticated, as more brands start getting involved, as more platforms start getting involved, Who do you guys think the winners are going to be in this space? And will it be that kind of, the duopoly, or do you think there'll be kind of lots of winners in lots of spaces? Perhaps Dennis can start.
My hope is that we don't end up in a setting similar to the one that we're in right now, which is just a little bit suboptimal. I don't suffer because of it, but it's just a tad suboptimal. That's the most positive spin I can put on it. And what I hope is that we'll see perhaps that half dozen or more kind of enabler AIs or horizontal AIs for where I might just have a single relationship with Alexa or Siri or the Google Assistant or some setting on Kik and so on and so forth. And then there'll be a whole host kind of app store-like vertical AIs for where you would want to hire them to do a specific job, and your future might rhyme with something where you say, hey Siri, could you have Amy set up a meeting with Dennis come first week of February when I'm in Manhattan? And Siri will certainly understand that that's not a skill that she have. She'll reach out to your employee, Amy will do the job, a day and a half later come back and tell Siri, hey, remember that thing you told me to do? I've done now. You can go back to your boss and say so. My hope then in that version of my future, for where I am wedded to a positive outcome of that certainly, is that the enable AIs aren't the winners, but the vertical AIs will be the winners, that your real relationship and the one that you will carry over from one setting to the next will be those little employment ships that you have with all these agents.
It's not the kind of walled gardens that we see in the media world. Do you share that view?
Definitely. Chatbots, if you look at how platforms have sort of evolved over the years, you start from the PC era and then into the web and then to mobile and now into chat platforms. We're just, I'm a mobile developer, so I live in the duopoly of Google and Apple, and I'm an Android or an iOS, everyone really is. But I think what we're seeing with chat platforms is actually more of a return to the web. With chat platforms, it's more a return to the decentralization where it puts the developers in control. So I think the winners in the bot platform or the chat platform wars are going to be the enablers. They're going to be the developer platforms that build the tools, build the AI, build the interfaces, those platforms on which developers are going to build on top of to build their bots. Because there's a lot of players in the chat market right now. We're all different interfaces. We're all different ways to connect with a particular audience. But at the end of the day, we're all sort of starting to come and focus in on the same set of tools that developers can use to build their bots. And so I think really more than anything, it's going to be like the web era where the developers are the winners.
And I mean, for you, bots are just yet another distribution platform you have to think about, and yet another kind of headache when you don't want to put kind of too many eggs in one basket in case they flip the switch and they do something different. So what's the kind of best outcome for CNN?
Well, at the end of the day, the good thing about being at a CNN is that no matter how you talk about the distribution and how frictionless and simple and accessible and fast and at the end, what is the it? And the it is the content. And so as a content creator, I think that it's it's an important place to be. When we talk to Google and we talk to Facebook and we talk to Kik and all these different platforms, it is, they do need that content, they need that storytelling, they need that reliable brand. Then the beauty is the best products are those that tie storytelling, at least for us, and technology together. And when they work, that creates your expectation and it's a sublime experience. And when they don't work, it's kludgy, you abandon, you reject it, and you never do it again. So what's really fun for us is say, all right, we know we have this great story to tell. We know the stories we want to tell, and more we're looking at the story first and saying, okay, this is a story we want to tell. These are the platforms we want to tell it on. How do we want to tell that story? And then in some cases, we can only do it, right, in our way. And that's why we have an app. That's why we have a website. We have a network. We get to do it the way we want to do it. We get to surface up the stories and content the way we want to do it. And then in other cases, it's the beauty of working with Kik, Line, which we've grown to 4.5 million in only about six months, and really just understanding those platforms and understanding that storytelling and getting the tech just right. So I think what's the open question I would say to you is that, I think we have to decide how much we want to be in the business of creating the code behind the bots. I think where we can probably create the most value is helping at least the community at large understand news, right? And some of the tagging, taxonomy, and just kind of the sentiment around news so that then bots that are very smart can help make sense of it.
Great, great. Well, we're all out of time, so if you could give a big round of applause for Dennis, Mike, and Alex. Thank you.
Thank you. Well, thanks, Mike.
I'll let you leave. So clearly bots are going to be a huge other ecosystem, another distribution system for people to think about, and also a way in which businesses can make their processes smarter. So we thought we'd get one of the experts when it comes to bots, when it comes to AI, and probably the most well-known AI system that's out there, IBM Watson. So I'd like to introduce up to stage David Kenny from IBM Watson, who's going to be interviewed by Matt Rosoff from Business Insider. Hi.
Well, thanks. Thanks, David. I want to start by asking, we've been hearing about AI, artificial intelligence, since almost the beginnings of computer science, and there are a lot of different definitions, a lot of different thoughts about what it actually means. So what's your definition of AI? Is it more than data analysis? Is it really about imitating sort of human thought processes, and how does that work?
Yeah, and first of all, I think we now talk about Watson more in terms of augmented intelligence. So it's certainly providing intelligence, but in a way that works with humans. How does it do that? I would say it is absolutely about bringing in all data. Our view is about 70% of the world's data is unstructured. Mm-hmm. So visuals, films, conversations, things that have historically not been turned into bits and bytes and ones and zeros. So we're, first of all, turning all information into information, and then understanding it, reasoning on it, continuously learning in ways that can enable us to be smarter about all information, not just the information that's been structured or published on the internet.
And what, on a technical level, had to happen to get to the point where it was easy enough to start making sense of these sort of random blobs of data, and so everything didn't just have to be in rows and columns?
So I think there are two things that happen. One, to be able to infer from all that data, you need a lot of math equations, more simultaneous math equations than ever before. And you need more data than ever before, so you need to ingest it. Both of those, and while we've been at this for decades, right, both of those were propelled by cloud computing, because cloud computing had the bandwidth to bring the data in, and it had the cost-effective way to process that much. And so that's been the biggest contribution to AI, is the cloud.
So in the consumer space, we're starting to see, I think, the beginnings of these useful AI assistants, right? So everybody thinks about Siri and Alexa and so forth. How long is it going to take before these things are truly useful? Because you still ask Siri to, play a song, and half the time it gets it right, half the time it gets it wrong. If you're using Google's thing, well, you can ask it Google search, and it's looking up something on the search index. So how long is it going to take to get to the point where we have a truly useful personal assistant that can sort of follow us around and do everything for us?
Well, it depends on the field, right? So the Watson platform does three things. One is conversation, which you're describing, and that's the backbone of bots. But then those bots have to have answers, and the answers come in two ways. One are answers that are rules-based, so law, accounting, and one are rules that are, or inferences that are more deductive reasoning. So, I look at this X-ray, does it indicate that it has a tumor? Or I look at this genome sequence, and does it indicate what form of leukemia I have? And those kinds of answers we are getting as we learn new fields. So I would say field by field. And I do think these are expert systems, field by field, as we're training AI. Then the virtual assistant's much more helpful because it's giving you a decision or an answer or a recommendation.
Is Watson currently behind any of the big AI assistants, or is there some, are any of them using IBM technology on the back end?
So so I would say, first of all, in the bot world, a huge number of bots are using the Watson Conversation Service, and those are done by all sorts of people. I'd say the biggest platforms are tending to be more focused. Watson is, there were over 1 million calls just last month, so we're certainly seeing a massive growth in people using this to power bots, and we're working with folks of all sizes.
Okay, so, but Watson, it seems, is more focused on business to business, right? Consumers are not going to be using Watson on a regular basis unless it's through one of these bots. So
Well, it's B2B to I, because I think we're still focused on individual decision makers.
Okay.
For sure.
Can you give me a sort of a concrete example of a success story, something that Watson has actually been able to help people do in industry in general?
Yeah, so listen, I think we're furthest along in health because we know that. So, there's a 60-year-old woman in Tokyo. She was at the University of Tokyo. She'd been diagnosed with leukemia 6 years ago. She was living, but not healthy. So we ran, the University of Tokyo ran her genomic sequence through Watson, and it was able to ascertain that they were off by one thing, and actually she had 2 strains of leukemia, and they did treat her, and she is healthy. And I would say that's one example, and statistically we're seeing about a third of the time that Watson is proposing an additional diagnosis, which is very helpful. So if you take that and you bring it back to the consumer world, we do have more folks in the kind of the OTT space using the same kind of pattern, but not just cure cancer or to give you a diagnosis, but to just recommend what you should watch next, right? Okay, yeah. And the recommendation engines are more useful. And then recommend what ad you might want next and what things would be useful. So I would say this sort of ability to recommend, to get to know people personally and recommend what they need next is important. And it comes from what we learned in medicine, but it's coming back to sort of media as well.
Yeah, I mean, do you think Watson could end up helping in sort of things like advertising, tracking, ad, preferences, those kinds of things? I mean, there's, sort of some debate about how effective ad tracking actually is and how well it actually works. Is that something that IBM or other companies working on AI can
Yeah, and so, I've been in this stage in prior lives.
Yeah.
I think the question is advertising effective? Before you get to the tracking, right? So, I mean, unfortunately, we've been just chasing cheaper impressions using programmatic. Is that really helping the end user? So I've been looking more at how does Watson change advertising itself. So we've got this project, Watson Ads, we're running on the Weather Channel first, and the idea is that the ads are conversational. So you have a conversation about what to make for dinner, you have a conversation about what kind of car or truck is right for you, and it's just the beginning, but I feel that if we have actually fewer ads, but they're actually services that help people, then you've got a better win-win. I think we've got to make advertising more relevant and effective, not just more measured.
And how does IBM play in that space? I mean, you have obviously Google very interested in AI. You have Facebook showing more and more interest in it, and then you've got Amazon, Microsoft, Apple. Everybody's kind of got their play in there. How do you guys stand out, and particularly in advertising? I mean, Google has its own interests in terms of advertising and ad relevance. How does IBM play in that space, or how do you compete? How do you stand out?
Yeah, and you named the big ones. You have to have a lot of computing to do this. So there's a handful of big platforms. I would say, why I'm excited about doing it at IBM is our approach, because we didn't start with a big consumer corpora, our approach is not a common knowledge graph. Our approach is to actually allow a company to train its own models and to extend its own IP, because otherwise you're commoditizing yourself. So I think that we have a real contribution for expert systems and a real contribution for companies who have a lot of data and insight to train models and to own those inferences versus just training one big master general model.
Okay, so basically spreading that knowledge, or having just a platform and then everybody can put their own.
Well, that's how search works, right? Semantic search is all about one knowledge graph. There are reasons that that's worked, but I think that's also commoditized the publisher of the information to a great extent, actually. I think when we get to deeper knowledge.
Isn't more data always better, though? I mean, wouldn't you want the most possible data from the most different sources all being fed through one system?
Do we want to live in a world where there's only one or two systems? This is the challenge we all talk about, right? Which is, why do algorithms start to drive our news feeds and things? Is when you get to, I believe in diversity. I believe that having a master program but allowing a diversity of models is actually going to create more insight. And I would say we see this in the work that we do today. So if I go back to cancer for a minute, we worked with Memorial Sloan Kettering on one system, we worked with MD Anderson on another. They didn't take quite the same approach, and they actually together gave better answers than if we only had one system. So it is more efficient to have one system, but I believe the world's going to be better if we're augmenting multiple forms of intelligence. And that's what our unique contribution to this is if you really believe you've got IP and knowledge that you want to extend and keep the inference to yourself, we're the best place to do that.
Okay. So you mentioned briefly in terms of news feeds and algorithmic news feeds, do you think that AI can help us stamp out fake news and get people to a closer view of the truth?
AI can process information and certainly real-time fact check, right? So you can see if something is truthful or not based on known facts, and it can know facts. So it could do that. It can certainly look at brands and individuals and journalists and understand how truthful they've been in the past. So it can help provide the data. The decision-making is still going to be certainly the writer,
Yeah.
but also the platform and the amplifier. So I think we can provide those tools. AI can provide those tools. Ultimately, people have to decide how to use them.
Right. One of the things that's been a real hot topic in Silicon Valley lately has been automation versus jobs and where that's playing out. And you saw Amazon released its video about the grocery store of the future where everybody will just take something off the shelf and walk out the door. And so the next day, I think it was the New York Post had on their cover, Robbie the robot with an Amazon logo on the front saying, "No more jobs."
Yep.
How do you balance that out? I mean, as AI gets smarter and it can do more things that people used to do, how do you balance that out in the economy, and what should people be looking at as sort of future training, future job growth?
Yeah, but listen, I think people can do a lot of things, right? So if we automate road activity and that creates leverage, in healthcare that certainly happened where the jobs a decade or a century ago were mostly menial jobs, and now they're more technical. In every field, in the creative fields, in transportation, logistics, I think you're going to create leverage. So as always, I think automated creates leverage. That helps the economy. You then need higher trained people, right? So I think we have a huge obligation to continue to train, to continue to educate, to make sure people are brought along. But more net jobs will be created. I think the transition is to make sure people have the skills for the next jobs that are being created. And that's something I think we have to own at IBM. It's something we have to own as an industry and a society.
What are those kinds of skills? What kinds of skills are useful in this new world where you have fewer meaningful yet perhaps less technically skilled required jobs?
Yeah, so I think actually they drive in two directions. Certainly you need more math and science because you got to program all of this, and we don't have enough skilled computer science majors to do this. So we certainly will need those skills. But also when you automate the mundane, when you automate the sort of basic interactions, that frees up time to be more creative, to solve bigger problems. And I think people who are truly creative, truly able to find new solutions are going to be incredibly valuable because we're going to get more hypotheses posed by machines, but then the humans have to actually then develop those hypotheses creatively. So I think you're going to see the growth of higher order thinking, both on the math and science side and also on the right brain creative side.
Can you train creativity? Can you train people to be creative?
Train people or train machines?
Train people, and then I'm going to ask about machines. Again, like if this is what the skills that you need, okay, well, I know how to learn how to do equations. Can you train people to think? Can you train people to be creative?
I do think that you can. I think that there's inherent skills, but I do believe you can create environments, you can help people with creative process, you can help people figure out how to switch that on. And quite honestly, I think by freeing up some of their time for mundane tasks, you've got more ability to do that. So I do think it's doable. I do think people can build creative skill.
Okay, and then can you train a machine to be creative and to what level? I mean, if you're, again, thinking about the example that we're all familiar with of the personal assistant. It's great to have an assistant that anticipates what I might want to do, not just what I've told it I'm going to do, right? Is it possible, when you see that level of creativity, is it possible to go beyond that? Train machines to make art, train machines to do journalism?
You can train them, they can help in the process. So a couple of things that happened recently with Watson. There's a rapper in the UK who actually used Watson to understand what kind of music worked well together and what people liked. And that created a new recipe, which helped him build a song, which launched at the top on Spotify. And I think he got there much faster because the machine helped him frame where he should be hunting. I would say, Fox launched a film and they used Watson to produce the trailer. So Watson watched all successful trailers. It then watched the whole film, it cut it into frames, and it recast it together and said, here's a trailer we think will work. The next version of this, I think, is going to actually be to have a trailer for men and a trailer for women and a trailer for kids, which is the same film cut different ways. So it will help with the creative process. But then this opens new doors for the, it didn't produce the film, it produced the trailer. It creates new input back to those who are creating.
Gotcha. Do you think we're set for some sort of societal backlash against this process of automation and AI? I mean, is AI scary to most people, or do you think it's going to continue to be viewed as mostly helpful? And how does that play out?
Listen, I think people are scared. I think we've seen that around the world, right? Because it is, this is a technical change like the Industrial Revolution. I mean, it's bigger than the wave of browser and then the wave of mobile. It's a fundamental shift. So of course people are afraid of the unknown until we make it doable. People are not afraid of Siri. I think people who are getting help with their cancer diagnosis are very grateful. I think people who are getting Watson bots to help them file their taxes, or banks who are using it to make decisions. People are finding it useful, so as they find it useful, they get less scared of it. I think it is important to keep the rhetoric low, to stay a little bit out of the science fiction and help people see where it's helping today. And I do think, listen, I think that the whole job thing and being clear how this is propelling economic growth and how that economic growth is creating new opportunities for people. It is important to close that loop. People care about it, not just for society, but personally.
Right. And then there's also, sort of the fear that as more information about me as an individual is collected to be used in these systems ostensibly to help me, there's also privacy concerns, there's concerns about hostile governments and that kind of thing. How do you sort of mitigate that? How do you ensure that individuals still retain some control over all this information?
Well, back to, my framework, our framework about being able to control your data, that can go all the way to the individual, right? Do you need to post everything and have it all known, or do individuals have not only the right but the responsibility to keep things private? So to me, I think it's important. I'd say it's why I'm also focused on the blockchain technologies, because if every individual had their information, and I could choose to rent it to you because you're going to use it to give me a better service, you're going to use it to give me a better film, or maybe you're going to use it to solve a medical issue. I can do that, but then I can keep track with blockchain of how it was used, permission it, make sure it isn't used in ways I don't want. So I do think that data will increase in value, and there needs to be an economy where people have some control of that value, and businesses have some control of that value when it's owned by the business, not the individual.
Interesting. So sort of like almost like an IP model, but for your own personal data.
Totally, and a data exchange, right? So it's coming, but I think this will happen. I do think there will be a backlash over just turning it all over to some central source that you don't really have transparency in how it's used.
Interesting. So right now, AI is mostly, at least as we see it, it's mostly in the realm of software. What do you think about AI in robots, like actual physical machines that do work for you in the home or in industry? I guess it's already more common in industry.
Yeah, so I think that there are other I think we're seeing all sorts of hardware forms. So I'd start with, first of all, this whole IoT thing, right? So if you have sensors and everything, that enables them to give us information, but also to manage differently. And through those sensors, certainly you can have robots. You can have avatars, which are robots on a screen. I think that we're going to see in the near future that we're going to get messages in our glasses, and we're going to have our ability for our glasses to also speak into our own ear to help me with better, more articulate answers for the questions you ask. So I think it's going to augment our reality in a lot of different ways. Robots being one case. I would say robots are certainly, we don't see them so much in America, but when you go to Japan and you see robots as bank tellers and you see robots helping with elder care, they're beginning to, they grow faster when the population isn't growing because you'd have a different job issue. But robots will be part of our life. We will have robots
That's interesting you mentioned the glasses too. So you're bullish on sort of the idea of this augmented reality where you're mostly seeing the real world, but then you have some information popping up?
Totally. So I mean, we look at real use cases right now, which is technicians, if you're fixing a computer or you're fixing your car, to actually see what it's supposed to look like and have you walk it through. Who needs an owner's manual when you can have it in your glasses? Yeah. I would say it's not out of the realm of reason that you wouldn't see it in surgery. Right, so that it really is helping you step by step get through a really complex process and walking you through it.
Does IBM have research, or does IBM have a play in that display AR area, or are you more interested in providing some of that back-end information in the systems to, provide that information to users?
So we have a huge research team.
Yeah, are you looking at AR, I guess?
I would say we absolutely look at AR. We think it is important for a number of use cases. We also are working with others who are in the field. Because it also, I think, is going to drive the technology. It has a lot to do with bandwidth as well and computing, so it's going to be at the front edge of where some of this goes. So AI and AR and VR are all connected.
Great.
Technically.
We were actually over time, so we have to go, but thank you very much, David. Really
good to be with you.
Yeah.
So thanks, Matt and David. So next up, we've got the people that write the checks. We've got the CMOs. So to find out what makes marketers' budgets tick, we've got two of the smartest marketers we know up on stage right now. We have Michelle Wilson, CMO of the WWE, and we also have Raja Rajamana, CMO of MasterCard, in conversation with Dave Morgan from Simul Media. Welcome them up.
Sit there. Yep, look, if you could share that couch. Perfect.
Thank you.
Great.
Good morning. Or is it almost?
Good afternoon.
Yeah, still good morning. We're going to jump right in and talk about marketing in this age. We've heard a lot this morning, particularly about content. We've heard a lot about technology. We've heard about the big mergers in the industry with Jeff Bewkes and Randall Stevenson both addressing it. We'll start with Michelle and then Raj. I'd like you each to tell us about your role, because I don't know that any one marketing role is the same in any different organization. And then tell us a little bit about your organization. Probably some of what we probably know, but maybe something we don't know as well about your companies.
Great. So WWE is the company that I work for, and I think most people would know WWE from our great personalities and characters that we've created, like The Rock, Stone Cold Steve Austin, Andre the Giant, John Cena. Obviously, characters that we create. What I would say is that people probably don't know a lot about our business and what my role is in particular. So we are a global media company. We are a content creator, so very appropriate for this conference. And essentially, we are creating content every day of the week, and what people probably don't know is our following. We have an extremely passionate fan base. We have 750 million social media followers around the world, and probably 60 to 70% of them are actually outside of the United States, so a global entertainment brand. We are the #1 sports channel on YouTube. I know a lot of you probably hear about the NFL and the NBA, but on YouTube, WWE gets over 1 billion views in a month, so 12 billion views annually, making us the #1 sports channel. And our TV content is really the hub of our storytelling, and we are distributed in 180 countries around the world in 25 different languages. And here in the US, our partnership is with NBC Universal. So again, I think people know about the personalities and the storytelling and the sports entertainment that we are, but I'm not sure they totally follow the breadth of our reach and the content creation that we do. So in terms of my job, I was speaking with Dave earlier on the prep, and I actually started at WWE about 7.5 years ago, and my role was specifically marketing and how to build the brand and build awareness for the brand. We made a strategic change about 8 or 9 years ago to position ourselves more as PG, TV PG, and family entertainment. So my role was really to come in and get the word out about the brand and educate decision makers and educate advertisers about our brand. And very quickly, what we realized is that not only did we need to build our brand, we needed to link that to revenue generation, and those things needed to go hand in hand. So my job is not only brand building on marketing, corporate communication, PR, creative services, I also have revenue in my title, which means I'm also responsible for driving the top line and the bottom line for the organization. So whether it's our TV negotiations with NBCU or partners around the world, the distribution of our content on various platforms. We 2.5 years ago launched a direct-to-consumer service called the WWE Network that currently has 1.5 million subscribers. That is obviously a huge revenue generator. So my responsibility is brand building, but also overseeing all of the revenue for our company. Again, television deals, our direct-to-consumer network, consumer products, live event business, and all of the top-line revenue for the company. So it really is the connection of the two.
Great, thanks, Raj.
Perfect, okay. I work for MasterCard. All of you think you know what MasterCard is, that it's a credit card company. We are not. We don't issue a single credit card or a debit card or a prepaid card. We are a technology company. We provide the platform that connects the merchants and the banks to the consumers. So the banks use our platform to issue cards, so we don't issue cards. So we are a technology company and we are a network company actually from that point of view. Very roughly, we have got about 1.7 billion consumers who have an active MasterCard with them. And that's one of the single largest sets in terms of the consumer sets for any company out there. And present in about 210 countries, pretty much universal. And my role at MasterCard is I'm the Global Chief Marketing and Communications Officer. And I also wear another hat. I'm the president of our healthcare division. And that's a new division at MasterCard and something which we are excited about. And as far as one interesting thing is the way MasterCard defines marketing is very different than what it is probably at most of the other companies. We are responsible for 3 pillars. The first pillar is, of course, to build the brand and drive all the soft attributes and our marketing KPIs, so to speak. The second one is to actually build the business, very much like what Michelle was saying about revenue, top line and bottom line. We drive that pretty significantly and in a quantified kind of a fashion. We have to demonstrate our value. And the third pillar is to create platforms that provide a sustainable competitive edge for the company. And these are experiential platforms which are very difficult to replicate by somebody else, both in terms of scale, in terms of quality of the content out there, and we see how we can actually monetize that while establishing a competitive edge for the company. So those are the 3 things that we do as part of marketing. And of course, as part of communications, it includes all the PR aspects, corporate communications, internal communications, and so on. So that's in a nutshell what my role is.
So one of the things I think it's a really interesting topic I want to start off with is the Chief Marketing Officer of today and the role of marketing today. And as I ask the question, I'm going to also open up with an observation that I made in talking to you both and looking at your backgrounds. And that if I had 2 of the top marketers in the world here, typically, the one thing that you would be certain I was going to find out between one of the 2 of them, it'd be we would find a master's from Northwestern in marketing, and if not that, a little bit of time at Procter & Gamble. Like, we'd have one of those 2 for sure. What we actually have are 2 people trained in chemical engineering.
True.
Which is crazy.
Both of whom own profit and loss responsibility at their companies. Mm-hmm. This is not yesterday's marketer. So starting with you, Raj, and then Michelle, I mean, I've heard you speak a little bit about marketing as a business, and I'd like you to talk a little bit about that.
Yeah, see, the couple of things. Marketing is undergoing a dramatic change. Today, there is so much amount of pressure on every CEO to deliver their results on a quarter-to-quarter basis. And the CEO typically has got 3 levers, right? They got revenue levers, which are very difficult to make it happen. They got expense levers, which are relatively easier to chop off. And then they got the risk levers, which is fraud, etc., which happens to you as opposed to you controlling quarter to quarter. So within the expense, again, if you see the 3 top ones, technology, people, and marketing. So when your company is under pressure, The first thing that they're looking for is seeing that if I have to play with my numbers and make sure that I deliver, and if my revenues, God forbidding, are falling short, one of the places that a CEO typically can potentially go to, or typically goes to, is marketing. They say, shut down a little bit of marketing because it's not going to make too much of a difference in this quarter. We can always catch up later. That later may or may not ever happen. Now, in that scenario, the responsibility of the CMO has dramatically changed. It's not about just brand building and doing some fluffy KPIs like awareness, predisposition, and those are important. They're leading indicators, but by themselves, the CFO or the CEO couldn't care less what your marketing KPIs are if they don't result in business KPIs. So for today's marketer, the CMO has to behave very much like a business owner, has to understand the financials, has to understand technology, because today a lot of marketing is technology dependent. And you know that many companies, the CMO has got a bigger technology budget than the CTO has. So they need to understand technology and be at the cutting edge. They need to understand data because everything is so data driven. Now, typically if you look at function by function of what the CMO needs to know, it's true that this person is a real general manager as opposed to a functional specialist. This is one part in terms of helping the company accomplish its financial objectives. The second part of it is, can marketing also be a profit center by itself? Meaning, is marketing a cost center, or can marketing assets that you have got can generate actually revenue for the company? And this is a relatively new experiment that we started over the last 3 years at MasterCard. And we are finding some very fascinating results and a lot of good revenue coming out of marketing streams. So it's a very different model that we are adopting over the last 3 years, I would say.
So Michelle, I'd love to hear your perspective on marketing at WWE, and maybe particularly, you have a very visible and strong CEO, Vince McMahon, in the public company. Does he just want to hear about where you are in the top quadrant of fluffiness?
Yeah, that doesn't work well at our. It's interesting because I think when you talk about today's CMO, and especially at a company like WWE, where it's all about promotion and marketing. That's really the core of our brand. But we are a publicly traded company, so we still have to drive bottom line results. And I think as a marketer, as I said, my role started as marketing, but then we quickly realized that in today's world, it's with the data, as Raja just mentioned, there's a lot of data, there's a lot of information, but there's pressure to drive revenue. And I think what Vince astutely recognized is that those things needed to be linked more. And so as a marketer, yes, we want to build our brand, but we have to grow the revenue at the same time. So I think putting those things under the kind of same, housing, if you will, makes a lot of sense. But in terms of marketing, our brand is a brand about entertainment. So at the end of the day, the soft things matter too. The mission at our company is to put smiles on people's faces. That's pretty fluffy, right? But at the end of the day, if we're not engaging our fans, if they're not entertained, if they're not laughing, if they're not booing, then we're not being successful. So those soft things matter, but the way we engage and how we ultimately monetize that all needs to be together. So our marketing is about entertainment. But if we can't then drive revenue, and again, I know this conference is a lot about the multiple platforms that are out there, you have to figure out where to put your content and then how to monetize it. And so when you think about marketing, the core of creating entertainment, what has to quickly follow is the monetization, which is why we brought it together. So it's very logical for us that we were able to do that. And what I would say is, having a chemical engineering background, which is very odd that we both have engineering backgrounds, I will say it's served me really well because there's just an influx now. I like to say there's been a tsunami of data. And at WWE, we are now in the direct-to-consumer business, meaning we have a network just like Netflix with 1.5 million subscribers. We now own all the data. We own the commerce. We own from A to Z that entire experience. And you're like, well, how do we make it better? It requires you kind of sorting through. Data's great, but you really need insights. And I feel as a CMO, it's about kind of finding your way through all of the data and looking for the true insight and then translating that into marketing actions. And I think it's a unique skill set that's very different than 10 years ago, where there wasn't as much analytics. So, I mean, that's great. The challenge to that is kind of sorting through it and creating insights that turn into action, which is really today's challenge to today's CMOs.
Yeah, so one of the questions I have, and I think this has always been relevant, but probably never as relevant as it is today. I mean, Peter Drucker told us decades ago that basically the only things that matter in a company are innovation and marketing. Everything else is costs. And maybe some companies looked at marketing too much as costs and lost their way. What's your role? What's each of your roles in product innovation? And not just innovating in the communication, but in innovating what you were going to deliver.
Yeah, and I can take, I think Vince McMahon, who you mentioned, who is truly a great visionary, has a saying that's pretty straightforward, which is first day on the job. And when I first started there, I'm like, I don't really get what that means, but his challenge to us every day is to come into work and think about our businesses as though it's the first day on the job. And you tend to be most objective when you don't know too much about the business. And say, don't assume what we did yesterday is what we need to do today. So it's actually one of our values as a company is challenging the status quo. And I think Vince is well known for kind of disrupting the status quo, whether it was when he went from syndicated TV to creating the pay-per-view business, the boxing, WWE, UFC. He created that business. That was, that was a very lucrative business for us. It was what I would call our legacy business. Our best content went there. Our fans pay $65 to watch one event. And in talking to Vince, we talked about how do we grow that, and he essentially said we have to, in not so many words, disrupt it to grow it, and what is that? So innovation was very much a part of my job. I said to him, it's an interesting, you have to go on your remote control and order this thing, get to the right screen, get charged $65 on your cable bill. Is that really the future? And even though it was very profitable for us, we said it's probably not where our fans are going. And so he put it on us and our team to figure out where do we go and how do you innovate. It was actually a requirement to figure out how do we disrupt this business and create something new. And that really became our WWE network, which we launched 2.5 years ago. And again, have 1.5 million subscribers globally paying for us. So innovation is actually a job requirement for us.
So Raj, I'd love to hear your example. Maybe even, I'm intrigued by the healthcare piece as well. So
yeah. See, basically, for us, the way we look at innovation is it's not a department, but it is a culture, right? It's a way of thinking and a way of going about every day. You can have product innovation, process innovation, concept innovation, service innovation. There can be a whole bunch of things that can happen. The role which marketing starts off with, which is extremely critical, is how do you get to the real insights and foresights? And when we look at the insights and foresights, we are not looking at consumer insights because what we feel is that you should look at people in a holistic fashion. They are human beings. What happens in consumption is a tiny sliver of their total life. And what happens outside of consumption impacts what happens inside consumption. So it's not sufficient to just say, let me understand purchase funnel and what's the preferences, how do they go about it, and what are the moments of truth. All that is important, but what happens outside it is very critical. So we start getting into how do you understand the entire human life and the journey and understand the interdependencies and come up with insights which are truly powerful. Secondly, we also look at what's happening outside. That's where the foresight part of it comes in, whether they are social trends, the economic trends, the cultural trends, the political trends, whatever is happening. Each one we start looking at and saying, how can this be related to my business in some way? Because unlike many other products, my business is about enabling purchases. It could be purchases of fabric, it could be purchases of water, it could be purchases of electronics, just about anything. So we're talking about the business of money and how to use money. And therefore, for us, we've got such a wide canvas, clean canvas, that we can really go anywhere we want to. So much so, for example, we said, one of the key things that we can come up with as an innovation is, we said, let's get into starting a restaurant and see what happens. So we opened our first restaurant in Milan, Italy. We call it Priceless Milano, a very high-end restaurant. Only 24 people served for lunch, 24 people for dinner. And we had 35 Michelin-starred chefs who were actually cooking the food, and at different times. And I
was just going to ask about your Michelin stars, so you've answered that question.
Yeah, and the key thing is it has generated such an amount of buzz. Nothing to do if you look at it from a point of a payments or a payments enabler, but we are getting into lifestyle. We are getting into experiences. Another example I would just give is we created something called Priceless Cities. So in 43 cities around the world so far, we have actually connected We are creating and curating experiences that money cannot buy, that you can go to that and then access them because you have a MasterCard. Like example, if you go to Brazil, I don't know how many, if anyone of you are from Brazil, you go to Rio and there is Christ the Redeemer, that statue, beautiful one in Rio. And normal consumers, people, when they go, they just look at it and then they come back. But if you're a MasterCard consumer, you can actually climb the statue and take a selfie with a picture of Christ there and get a different view. You go and attend some private concerts which are available after everyone leaves, and it's only for those people. An exotic once-in-a-lifetime experience. Or you have a lunch with the Duke of Richmond in Old England. And these experiences you normally don't get, and they tend to be so memorable and so amazing. We are creating and constantly curating those around the world now. And that's again something if you were to see strictly what have we got to do with Christ the Redeemer statue and where is MasterCard, what is the link between the two? But there is a brilliant, subtle link that not only moves the brand perception and the brand ratings and all the good marketing stuff, it moves my share of business. Very crystal clear. That's where, to her point, the data analytics part of it comes in.
So, Michelle, I'd be very interested in a similar way. With the shift to direct-to-consumer, and you talked about the value of that direct-to-consumer, how has that changed data analytics, insights, foresights, understanding the consumer differently than when your business was, for that business that's more largely syndicated?
Well, I mean, in the past, WWE, we were, quite frankly, reliant on our partners to give us data. So whether it was our pay-per-view partners or Mattel, who happens to be our master toy licensee, we're relying on them for retail data. So everything was kind of one step removed from really understanding how to make good decisions. And having a direct-to-consumer business and having all of that data. At WWE, I think 2 years ago, we had one person in data analytics in the entire company, and we're now up to 25 employees that their only job is to look at the data from our direct-to-consumer network streaming service and provide us with data and insights. So it has become a daily part of my job is to look at that information and figure out where do we go from here. And I think that's very different than in the past where we didn't have access to the data. So you were really relying on maybe focus groups or some research that you would do that wouldn't necessarily be as precise. In direct-to-consumer, you literally, I can tell you exactly if you're a subscriber to our service, what you watched, how long you watched it, what platform you were watching it on, when you stopped watching, how many things you watched in a given week. The amount of information is just tremendous for us to figure out how to make the service better, how to personalize the service for you, and things that we can do down the road to grow the business. So that's really transformative. It's transformed our company, quite frankly, in terms of how we run the business. And again, like I always say, it's kind of an overwhelming amount of data. So having data scientists, we've never hired data scientists before in the history of our organization. We now have, many of them kind of digging in with PhDs and helping us to sort through that information that didn't exist before. So it really is a very different role than what it was maybe 5 years ago, or even 3 years ago.
So one of the things that is talked about a lot at this conference are all the disruptive technologies, and particularly the disruptive personal technologies. It seems to me there's a number. You're all getting disrupted in all sorts of places. In positive ways, and a lot of if you can take advantage of it. How do you stay on top of things? How do you develop strategies? And I guess the simple ones I could throw out would be like, I'll give you each a different one, but like the e-wallet and the mobile-based payments, and Echo and Alexa, and maybe voice driving navigation in the home.
Yeah. See,
sorry to interrupt you on that.
Firstly, from our point of view, as I said, one of our core values as a company we look at is innovation, staying ahead of the curve. And payments and payment-enabled auxiliary functions are such an attractive space for many people that whether it is an Apple or a Google or a Samsung, you've got all kinds of companies which had nothing to do with payments before entering the space. And a lot of Silicon Valley companies. And they are nimble, they're agile, they're brilliant, right? Each one of them. So one of the first things that we have done is A, anticipate what is happening. B, strike partnerships. Many people ask me several times saying that, Apple has come up with Apple Pay. So what's the impact on MasterCard? It's very positive because we partnered with Apple Pay And Apple enables, in this example, you to make your payment much more seamlessly, securely. And I'm the one who is powering below. So they are the front end, and I'm the back end. In a traditional card, the bank is the front end, I'm the back end. So the key thing is we always work with partners, whether it is banks, whether it is merchants, or these Silicon Valley giants, and bring things to the market. Like for example, when Apple Pay was launched on day one, on day two, we had taken out full page ads about MasterCard, Apple Pay being there in the market. And this is something which we constantly strive with large companies as well as small companies. I'll give one other small example. Like we partnered with a company out of Canada, small one, which has an IP about detecting a heartbeat pattern. And what has heartbeat pattern got to do with MasterCard? Well, heartbeat pattern, every individual has heartbeat, irrespective of whether you're running or sleeping, the pattern is unique to you, as unique as your fingerprint is. And if you have a wearable device that tracks your heartbeat pattern, and you have encaptured or encapsulated your payment into it by simple touching the terminal contactless, you make your payment happen very safely. If somebody steals my wearable device and she wears it or he wears it on, it doesn't work because their heartbeat pattern is different than mine. So stuff like that we are getting and trying to see how we can enable things very effectively.
That's cool.
That's interesting. Well, as far as Alexa, interestingly, WWE content's available on Amazon Prime, so we love when people say WWE and it comes up on their TV. So, but we work with all of the platform partners. I would say that technology has impacted our business in dramatic ways. And the emergence of various platforms has really caused us to rethink how we produce our content. Again, we're a content creator, and if you watch Monday Night Raw or SmackDown Live on Tuesday on USA Network, there's a ton of production that goes into that television show, the pyro and the music and all of the producers that work on that show. What we've found is that technology has pushed us to rethink what production quality you need on various platforms, and I think it's interesting for us. It's kind of pushed us. If you're doing a Snapchat story, that's a very different value content that we're putting on there. Viewing on mobile devices, a good portion of our content's now viewed on a mobile device. So the kinds of things that we do, the storytelling that we do, has really had to be modified by platform and then decide what goes where so that we maximize the money that we can make. So technology has had a dramatic impact on how we tell our stories and where we put them. And I think it's going to continue to do that in the future. And our point of view is we're platform agnostic. We're going to go wherever our fans go, and we're going to modify the content to be there. But I would say the amount of rethinking that we've done in the last 3 to 4 years is more than that was ever done in the prior 25 to 30 years of the company. It was kind of the same production model. Now we have multiple ways that we produce and deliver content to our fans, and that, again, has changed dramatically in the last 2 years.
So with just a couple minutes left, I'd love it if each of you could spend about a minute or so telling about what's the one big area or passion that you're really thinking about that will evolve over the next couple of years. That's that one sort of pet project that, maybe just a personal one you really own, maybe you have to fight it through with your teams. Maybe start with Raj and then Michelle.
For me, it's not just one single technology, but it is a series of technologies. The confluence of these technologies is what is going to be the big game changer. So on one hand, you got virtual reality, you got the chatbots, you got the augmented reality, you have got commerce. All these things, rather than looking at them as standalone platforms, what is the power of integrating them and leveraging them? And we actually did a small pilot as an example when we had Graham McDowell, one of our brand ambassadors in golf. We had a virtual reality film with him on TPC Sawgrass 17th hole. Anyone will do it. But what we did was we added a layer of augmented reality to it, wherein when you focus on his shoes, they pop out, and then you get information about that. And then had, subsequent to that, commerce in that, which is I can buy it right from that experience. For me, things like that, not just standalone Internet of Things, or it is VR or AR, but how they come together in a harmonious, effective way that you can reach your consumers in an appropriate fashion, and you are able to engage them in the right way, and and sort of get the desired behavior out of the consumers. That to me is the most exciting. It's a confluence of all, as opposed to any individual technology.
Michelle?
I would say mine's not that dissimilar in that we already have a direct-to-consumer network that we've created. It happens to be a streaming service today. I would say and we've been able to scale that globally. So we have this global platform that we're delivering content directly. My vision is that right now it's a streaming video service, and similarly, the vision would be what else can we deliver on that platform? So we currently have video games. I think most of you know we have a WWE 2K17. We have video games. We're testing virtual reality. Things like buying products or having a social virtual conversation with a fan who may live in Mumbai. We have a lot of fans all over the world. So to me, it's our platform today of a streaming service and an on-demand video service, evolving that into essentially, I call it a portal of WWE experiences, whether you want to play a video game or you want to have a chat with a fan who lives, halfway across the world, or you want to experience a WWE WrestleMania or biggest event of the year with a ringside seat through virtual reality. That all being delivered through a single platform, to me, is kind of the future.
Excellent. Well, we're just running out of time. I want to thank you both, Michelle, Raja. This has been wonderful. I think certainly it's the first time we've had 2 chemical engineers, CMOs, ever on stage at once.
Thank you.
Thank you.
All right, coming up now, we want to take you into the future. We're going to hear from Ford Motor Company's corporate futurist, Cheryl Connolly, who's going to be joined in conversation by Katie Thompson, senior editor at Business Insider.
Hey.
Hello.
How's it going?
It's good.
Good.
Glad to be here.
Yeah, welcome.
You guys have had such interesting conversations throughout the conference.
It's been fun. It's definitely been fun. So we're going to talk to you, a futurist from Ford. Can you give us a little bit of information of what a futurist does? It's kind of a different, fun title that we don't hear a lot, and I don't really quite know a lot of other companies that have futurists. So
yes, it's funny because I always joke that when I travel and some polite stranger says, "So what do you do?" There's this instance about like whether you're honest and you say I'm a futurist and then suffer their scorn, their skepticism, someone like outright scoff, and then they put out their palm and they'll go, "Then read my future." Most times I just say I'm in marketing. But I think it's easier to tell people what a futurist is by explaining what I'm not. And I'm not someone who predicts the future. And ironically, with my title, it is designed to remind people that when you put together a plan, particularly a long-term strategy, there are some underlying assumptions on how you think the future is going to play out. So I think I'm probably more appropriately referred to as the polite contrarian, because my job is to challenge the status quo, to have people rethink, like, well, things are going in this direction. What if they went in a different direction? And I have no skin in the game. It's not like I'm trying to make my point or prove someone wrong. It's just saying, when you're in a meeting and someone says that'll never happen, not in my lifetime, I always like to pause and go, well, let's just play for a moment. What if it did happen? What if those things were to play out? Would our strategy weather that?
yeah, to be ready for it. So you guys have this trend report. Can you tell me a little bit about why you do that and what is the biggest trend in this report? Can you give us a little hint of what the biggest prediction is?
I will. So more specifically for our context, the way we use this on a day-to-day basis is that a lot of people don't realize it takes 3 to 5 years to take an idea and actually execute it so that the rubber meets the road. So inside of Ford, every day, whether you're in design, engineering, or marketing, in some way, shape, or form, you're tasked to anticipate what consumers want. And we know from even Henry Ford that if he had asked people what he wanted, they would have said faster horses. So we still deal with that challenge that if you want to be seen as a true innovator, you have to take on the responsibility of trying to imagine a future that no one else has imagined. And this trend book helps sets up those conversations. And these are micro trends. So these are the ones that we think are right on the horizon, the ones that are going to be relevant for 2 to 5 years versus a macro trend, which we also look at, which is like aging population. But that's going to be relevant for 2 to 5 decades. So for this book, it's our 5th anniversary. And so we've published over 50 trends in the last 5 years. And when we were getting ready for this one, we said, well, let's look back and see what we got right, you know. And there was the one trend that I think comes to mind is the about truth. Trust is the new black. In fact, trust is the new black was the very first trend we published in our first book in the inaugural year. And in fact, in many ways, it feels more relevant today than it did even when we talked about it in 2012. And I think that right now, if you look around the world, there are great discussions over what is truth. And I used to think naively like truth was something that was self-evident, but all you need to do is kind of read the newspaper and recognize that truth is always going to be colored by perspective. You know, is the glass half full or half empty? Both points of view are technically accurate, but then you start to realize how much opinion plays into it. And so today people are complaining. They're saying things, consumers are saying like 80% of consumers would tell you that they think news is more opinion than actual news coverage. And when you're in that situation, it makes it really daunting or difficult to navigate the marketplace. And so those brands that can distinguish themselves by being seen as ethical, good corporate citizens, being transparent, or delivering on their brand promise, we think have a really unique opportunity in the marketplace. So trust, that's what we're trying to build with our customers every day.
Yeah, and that was a prediction that you guys got right. So this year, when you came out with your trend outlook, what was the big trend that you guys are predicting this year?
So there are 7 new ones, but the one I think that is most compelling is this tech spiral. And tech spiral recognizes that modern day technology, these digital devices, constant connectivity has made our life better in immeasurable ways. But what tech spiral tries to do is to examine at what cost. You know, so what is the underbelly? What is the undercurrent or the consequences? And many people would argue that today people are less polite. Over 70% of people around the world believe that all of this technology that's leading to a sedentary lifestyle is contributing to obesity, sleep deprivation, shorter attention spans. We're letting machines do our thinking for us, and that can be problematic in multiple ways.
So how though? I mean, tech's supposed to be making our lives better, right? I mean, what are some of the examples that you're seeing where it's becoming a problem, or that you're predicting where it become more of a problem?
You know, for society, you know, we surveyed 9 different countries, and sometimes we span it, we slice data by age. And so we looked at people that were 18 to 29, and we said, what percentage of you know somebody who has ended a romantic relationship by text? And over 60% of people, you know, which seems very, very cold on the surface, but as you and I were talking before, I'm like, well, you know, in my day, 20 plus years ago before I met my husband, ghosting was the norm. They just stopped returning your call. They just kind of disappeared from your life. So maybe a text is kinder. But there's lots of studies that talk about how technology is interrupting workflow in the office. There's some reports that say every 8 minutes, the average that an office worker is interrupted, and it takes a full 20 minutes for them to resume to whatever they are doing prior to that disruption. Even, I don't know if you saw, there was a widely circulated study last year that claimed that goldfish have a shorter attention span than humans. And I don't know exactly how they did that test. I have this vision of like probes going into like a little fish bowl. But intuitively, I don't think any of us question it, because we know that we have giving constant partial attention to the world around us. And that creates distraction. It obviously creates distraction if you're behind the wheel. And so Ford works really hard to mitigate that distraction by platforms that pair these phones, these devices, with our entertainment system, and they keep it voice activated. Ultimately, our goal is to keep our eyes on the road, the hands on the wheel, and the mind on the drive. But you can't just think about the drivers anymore. Like pedestrians are increasingly showing up in emergency rooms from cell phone related accidents. And so Ford has invested heavily on kind of looking at sensors around the vehicles so that we can better anticipate the difference between an object and a person.
That's interesting. So looking forward, how does Ford plan to, address this even more? Because this is a prediction that apparently we're going to see more of, people being more distracted, more consumed with whatever they're doing on their phones or other devices or in the car. So looking forward to even, an autonomous future. How does Ford plan to address that?
So in the near term, I think there are things that are visible already. So when we first came out with this Sync platform in 2006, we learned quickly that we had to clean up the screen. We needed more black space. We needed icons. We needed to make it streamlined and intuitive. And so we're now in our third iteration of this platform. And when we have improvements, we can send software updates to our customers. So literally, if the vehicle is parked in your garage and we think there's a better way to do it, we can deliver that update overnight while you're sleeping. So those are the near-term things. But in terms of autonomous vehicles, I think autonomous vehicles have captured the attention of the world in general, because I think many people are saying there are better things to do with my time than to sit in this gridlocked traffic. And I think that's particularly appropriate for a city like New York. 160 million hours are lost each year to the daily commute or traffic jams. And so when we think about autonomous vehicles, we're thinking, how do we give people back that time? Can we do that in a way that makes their lives better? We have announced that by 2021, we will have fully autonomous vehicles on the road. And these are vehicles that won't have a steering wheel. They won't have a gas pedal. They will be available for commercial application, probably for ride hailing. And we think that will make mobility more affordable, more accessible to a much broader audience.
Do you think that Ford is scaling that sort of vision fast enough to keep up with this sort of tech spiral and the distractions that are going on in our lives?
I think we work really carefully. Our head of product development talks about, this philosophy of technology. Just because you can doesn't always mean that you should. And so right now we have to be very purposeful about what we bring into the car, because I would guess that on average, everyone in this audience has about 20 apps on their phone, but studies suggest that you only use 5 of them on a daily basis. And so what we're striving to do is, people don't want to pay for functionality or capacity that they don't find relevant. So we have to be really purposeful and meaningful in how we do it. But there are regional elements too to this, so it's not a one-size-fits-all. Interestingly enough, when we talk about autonomous vehicle, the market that has expressed the greatest interest is India at 84%, where if you compare that to the United States, the number drops down to 40%. So I don't think an autonomous future is going to be like a light switch and suddenly the fleet changes overnight. I think it'll be done where it makes sense. And then for those people who still love the thrill of the drive, we'll continue to produce performance vehicles. I mean, I was telling someone the year that we announced autonomous vehicles is the same year that Ford won on their 50th anniversary at Le Mans. So we placed first in that race. So we still love the thrill of the drive, but that won't work for everybody.
Yeah. Are there any other big trends that you want to highlight from this report besides the tech spiral?
Well, I think it's, time well spent. Time well spent, there's this growing recognition that time is the ultimate currency, and where you choose to spend it becomes increasingly important, because rich or young, old or poor, we all only have 24 hours a day. And so I think it fits very well in helping people navigate that time. So we do things like Ford Pass, and we're targeting Ford car owners, but people who don't even own a car. And we're trying to use this platform, which works like an app, to help you navigate your journey every day. So what's the fastest route? Can you reserve your parking spot in advance? Can you extend your parking meter? Should you hail a ride? Should you take a bike that you can rent? And this fundamentally means that we have to change our focus, because our customers aren't just the people behind the wheels, but even cities like San Francisco we're working closely with to kind of figure out their future mobility.
Getting people from point A to point B seamlessly and saving them time.
Yeah.
Okay, great. I think we're out of time, so I just want to thank you, Cheryl, for taking the time to speak with us.
Thank you so much, Katie.
Thanks.
All right, thank you, Katie and Cheryl. Coming up now, we have Mark Mahaney back again from RBC Capital Markets. He's going to be talking us all through the fascinating company that is Amazon and the multi-pronged business strategy they have there. So we'll have Mark run us through a quick presentation, and then he'll be followed by Henry Blodgett in conversation, our CEO and editor-in-chief at Business Insider. Thank you, Mark.
The fourth horseman, okay. I know we had a panel earlier that we went through Facebook, Apple, and Google, and somebody quickly tweeted, what happened to Zon? Well, here's Zon. What's next for Amazon? What I call the fourth pillar, I'll make the reference clear pretty soon. You should know this, for all of us here, this was the biggest investment miss of our lives. If you had bought Amazon at the IPO, you would be up 51,000%. If you'd bought Amazon when Henry Blodgett told you to in December of '98 on a split adjusted price of $67, you'd have had a 10-bagger on your hands. I can't give you that, but I'm going to make a pitch later as to why this could be a trillion market cap name, and so therefore could be a three-bagger from here. What's next for Amazon? Well, first, what are they doing right now? If you're going to read one thing in technology this year, read the Amazon Jeff Bezos shareholder letter, 4 or 5 pages. I think he wrote it himself. And he talks about his strategy, his thoughts, how he comes through decisions, et cetera. And in there, he said, AWS, Amazon Web Services, Marketplace, and Prime are all examples of bold bets at Amazon that worked, and we're fortunate to have those 3 pillars. And I can assure you we also remain hard at work on finding the 4th. So let's go through these 3 pillars and just see how sustainable they are. I think they're extremely sustainable. This is the growth of the company as a whole. It is so rare that you see companies of this scale, 60 billion in revenue, generating 20% plus growth for 23 of the last 24 quarters. That's not a typo. That's what they've been able to do. And in fact, you've started to see a recent re-acceleration in the revenue growth rate. If you peel it back, there's 2 parts of Amazon that everybody knows. There's the retail side of the business. Why is the growth sustainable? There's a rule of 10%. And what I'm saying is that about 10% of all retail sales are online. Here we are 20 years into the commercialization of the internet, and only 10% of retail sales are online. This is kind of reverse of most of the charts that you see. I guess in 2016, this year, okay, 89%, so it's 11% of retail sales are online now, but there are 89% that are offline. That's a 21 trillion market opportunity still to come. And you're seeing that the online penetration rates are actually accelerating. It's a little bit hard to read this slide, but what it shows is that the percentage of offline retail sales that are migrating online has actually been accelerating for a couple of reasons. I think mobile adoption is one of them. Consumer shifts take a long time, but they can really build and accelerate after a while. That's what we're living through now. Things like faster shipping times are also part of this. In e-commerce, as you know, there's Amazon and there's pretty much nobody else. We did our own survey work on this, and just in the US market, you see this dominant position when you ask consumers where they shop online. You know this. One of the reasons is Prime. We think that there are now 100 million Amazon Prime customers worldwide, maybe around 60 million in the US, because we think in the US, Amazon has doubled its penetration, its Prime penetration. In other words, of all the Amazon customers, 3 years ago, only about a quarter were Prime subs. Now it's almost 50%. It's probably a little over that now. And what happens when people become Prime subs is that they spend more. They spend more frequently with Amazon. Their satisfaction levels increase, and then their intention to spend increases, and there's more. Every year that Amazon people are in Prime, they become more loyal and they spend more. They build up this loyalty engine, and what this data says is that for each year that they are a Prime customer, Prime cohort year 1, 2, 3, and 4, more spend, more intention to spend, more frequency, more loyalty. Then they layer in this thing called expedited shipping. And we did this study, we've done this 4 years in a row, and we asked people, show of hands, in this survey, who's extremely interested in, very interested in next day shipping, didn't put a price tag next to it. 4 years ago, 43% of respondents in the US said they were interested in it. Now it's 61%. You know why? Why is all of a sudden there's this, not all of a sudden, over 4 years, has interest grown in next day and same day shipping? Because this company out there called Amazon has given it to you, and after a while you notice it. You notice when you get packages 3 days after you order it, and you're not going to use that vendor anymore. You're going to go with the vendor that you know, the retailer that you know, that gets those packages to you next day, same day, and then eventually next hour, same hour. In some cases, that's already happening. Now, that's all the retail side of the business. The cloud side of the business, don't forget, cloud adoption is still very early. We did a survey here, about only 39% or 40% of businesses that we surveyed are even using cloud computing services, or even trying to store their databases up in the cloud. And of those that are using it, a majority, 60% or 59%, had only been using cloud services for less than 3 years. So cloud adoption is extremely early. If there's a 10% rule for retail, it's probably 5%, 5 to 10% for cloud. In other words, only about 5 to 10% of all workloads that could be in the cloud are in the cloud. And if you look at who rules the clouds, you'll see when we did survey work of IT managers, the one name that kept increasing market share response levels in the group was Amazon Web Services, well ahead of things like Google Cloud and Microsoft Azure. Amazon Web Services, AWS, also translates into Amazon Web Success. It's a 12 billion revenue run rate business that's got 25% margins. That means it's generating a lot of cash with which to fund a lot of new growth experiments, and we're going to go through those experiments. So what's the math behind a $1 trillion market opportunity? This is just fun with numbers, and I know there's some financial types in the room who could poke holes in this, but I'll just lay it out for you. If you take that retail business and you continue to grow it for 5 years at 20% year over year, and you take that cloud business and you continue to grow it at 5 years at 40%, and then you put 10% margins on the retail business, 40% margins on AWS, voila, $82 in earnings. You put a 25 PE multiple on that, modest premium to the market, and you get a $2,000 stock price, which would equate to $1 trillion market cap. That's the math. Going forwards now, switching forwards, that's just the core business, by the way. That's if everything goes really well and they keep executing extremely well, that's what the core business could generate. But let's talk about some of the newer areas that they're going into. We did a report recently on the 10 most interesting, most important trends in the internet space today. 7 of these rank extremely well for Amazon. Okay, cloud computing is in there. The term I like, videoification, which Henry I think referred to as social video, is in there. Artificial intelligence and machine learning is in there, and I think this is right now the commercial winner in that space. Amazon is. So Amazon screens really well against these trends, but what's next for Amazon? Again, this is from the shareholder letter, a highly recommended reading in the tech space, where Bezos talks about, where the company talks about the difference between sports and business and the difference between truncated returns, only getting 4 runs if you hit a home run, and business returns where you can get 1,000 to 1 returns if you get investment, lucky on the investment. Big winners pay for so many experiments. So what could be those experiments? We did a report about a month ago, 2 months ago, and we're updating it a little bit here, where we talked about our ideas for Amazon's 4th pillar. So AWS, Prime, Marketplace are the 3 pillars. What's the 4th pillar for Amazon? What are they investing in? We're not going to really know which one of these it is for 5 to 10 years. Here's 7 ideas: payments, business supplies, groceries, online advertising, entertainment, shipping, logistics, and AI VR, not artificial intelligence, virtual reality, but voice recognition. And we looked at all of them in terms of their TAM, total addressable market, how inefficiently served the market is. If it's an efficiently served market, it's probably not one that Amazon's going to spend a lot of time in, or it's probably not, they're not going to be successful at it. And we also screen these categories by whether Amazon had a core competency in those areas. So let me go through each of these quickly. Payments. Earlier today, Gene Munster talked about Apple and Apple Pay being able to disrupt PayPal. Here's some data that came from Channel Advisor. Most popular payment method used by customers after credit card. Of course, PayPal's first, but Apple Pay is way down this list. Look where Amazon Payments is. I think Amazon's ability to disrupt payments is vastly underappreciated. The one challenge here, whether this really becomes a 4th pillar for Amazon, is that it's already a reasonably efficiently served market. But anyway, I think the presence here of Amazon and this pillar is underappreciated. Second potential 4th pillar is Amazon Business Supplies. So they've renamed this a couple of times. There are now 300,000 businesses that are customers of Amazon. Are these household names? No, they're not supposed to be. They're business names. And it's already generating $2 to $3 billion in revenue a year for Amazon. So business supplies, something that involves a lot of ground logistics, seems like a natural 4th pillar for Amazon. Third potential 4th pillar, Amazon Groceries. $700 billion market forward, 3% is penetrated online. Let's think about this. Huge TAM. We all instinctively know how inefficiently served the grocery market is. And then this is something that to get right would require logistics expertise. You put all those 3 together, it's a natural for Amazon. I don't know whether the Amazon Go store works or not. Amazon has the cash flow, the scale, and the size to do lots of experiments to figure out what's going to work well, then they'll accelerate that one. So I think this is a clear 4th pillar. Online advertising is a 4th pillar. We estimate that Amazon generates about $1 billion a year in ad revenue from some basic sponsored ads that are on the site. We know it's a huge TAM. The issue for Amazon as to whether this is a pillar, I don't think it is that there's already some really well-run large companies, Facebook and Google, that are very good at serving the needs of marketers and consumers. So, and there's also potential conflicts for Amazon as a commerce company. Okay, the next potential pillar, Bezos mentioned this at an industry conference in the middle of this year, and he said entertainment actually could be a 4th pillar. I, like some other people, was scratching my head on this. But when we ran surveys, what we found on the left side is that access to unlimited instant streaming video was actually a key reason why people signed up for Amazon Prime. So they could actually use video as a customer acquisition and a customer retention tool, and a customer activation tool on the right. The quote from Jeff was that when we win a Golden Globe, it helps us sell more shoes. Man, that's a very hard thing to prove externally, but I assume they've got the data internally to back that up. And there's a real OS moment in here. There's a real oh shit moment in here. And I was talking with Dave Morgan about this earlier. He gave me the idea, which is that, wait a second, if Amazon can use video, this could be massively disruptive and negative for a lot of traditional media companies and advertisers. And the reason is that if we're moving away from prime time towards Prime, this Amazon Prime, and people are watching video and entertaining themselves this way, the ad opportunities are moving away from prime time, and the marketers now have to go, not only the product companies, but now the marketers have to go to one platform, that's Amazon. Next pillar potential is what I call shipping and logistics. Amazon within 3 years is going to be shipping just as much package volume as FedEx in the US. In 7 years, just as much package volume as UPS. They've denied that they want to get into the shipping and logistics business in terms of selling it. But I think it's almost inevitable. I think you'll have something called Amazon Shipping Services. There's Amazon Web Services with a great acronym. I'm not sure the acronym works as well with Amazon Shipping Services. And then you can think about how this could be moved into different types of services. So you could have really, sophisticated, really smart, high-end, smart ASS services. And then you could have the kind of the introductory, dumbed down version, the dumb ASS services. I really enjoyed putting that thought together. Anyway, I think this is a no-brainer. I'm absolutely convinced Amazon's going to be, in 5 years, 10 years, is going to be a major vendor of shipping services and logistics services. And the final one is AI, ML, artificial intelligence, machine learning, voice recognition. This, we did a survey, 26% of people who own these devices use them to purchase more products from Amazon. This is Amazon's foray. It's the Trojan horse, not so much into the living room, but into the kitchen, into the pantry. This is a huge win for them. I think this is the biggest selling product this holiday season. I think you'd probably agree with me. So I'll just wrap it up here. What's the future like for Amazon? Well, there's a couple of different paths here. Business supplies, groceries, shipping, logistics, AI, and VR. Summing it all up, they've been winning in retail. They're practically created cloud computing, and they're winning there. I think those two by themselves may be able to support a $1 trillion market cap, which would be a triple from here. I can't give you Blodgett-like returns, but triple's pretty good. They may not have only one fourth pillar, but they may have several, and watch these particular areas: business supplies, groceries, shipping and logistics, and video and Alexa. That's it. Henry.
All right. Thank you, Mark. I'm so glad that somebody else gets to play the role of insane Amazon bull. All right, so you answered my first question. So first of all, you just gave it the $1 trillion market cap curse. Every time, going back to Cisco in 1999, somebody says, oh, it's the first $1 trillion company. It's like the next day, it collapses in a heap of wreckage. So let's hope that that's not the case here. It was recently Apple, as you remember, before Apple became the company it is today, which is a little bit different. Anyway, so here's the question. Which I have looking at Amazon, and I have been a shareholder for a long time and could not have more respect for Jeff and the team and everything that they've done. But I mean, how much can one company do, and why is it that they don't suck at all of these different things they're trying to do at the same time? I mean, it's extraordinary, all the...
Let's not forget, Amazon has sucked at a few things, and that's a technical term, Wall Street term, right? So let's get this right. The Fire Phone, again, I think I mentioned earlier, I have one of the 6 that was sold in San Francisco, so that didn't work out too well. And then Amazon did, let's go back way in history. You know this better than I do. Amazon attempted to go into the auctions business, take on eBay, that upstart 15 years ago. That didn't work out too well. Amazon's attempted to dominate China. That didn't work out too well. They are probably losing, I don't know, $500 million a year in that market. Distant number 4 in that market. So just put it in context. They've sucked at a few things. And then at the end of the day, though, it always comes back to how good the management team, how consistent the management team is. And one of the things is if you were to go and interview the top 10 executives at Amazon today, I don't think they'd be that different than the top 10 executives of 15 years ago. I mean, there's been some changes, but extraordinarily consistent top, dozen reports there, and then a founder who, as far as I can tell, hasn't lost his zeal for the company. And you've seen that at most of the other companies. Zuckerberg's showing a lot of, endurance, but the Google founders, they haven't stayed as engaged in the company as Bezos has with Amazon. So you keep that team together, they're more likely to get hits than losses.
And so we interviewed Jeff Bezos at Ignition several years ago. It was right after the Fire Phone disaster. Yeah. The stock had at that point gone from 400 to 250 because it seems everybody on Wall Street was suddenly like, oh my God, we thought they were so smart when it was 400, but the Fire Phone's the dumbest idea ever. It's terrible. They're going to go bankrupt. Jeff came on and said, look, in the grand scheme, it's nothing. You have to do these things. So the question is about investors. Like, why are investors so schizophrenic about Amazon? And I say this, obviously, the last few years, the stock's been on a tremendous run, but the faith seems to be shaken so easily by something like the Fire Phone, which was a nice bet. It didn't work, $600 million, goodbye, who cares? You've got a lot of it. Like, why so impatient?
Okay, I'm going to give you a completely different point of view on that, Henry. I wondered that myself, but as I think back on it, Amazon entered into a dramatically large investment cycle in 2010, and if you look at what happened to earnings the next 3 years, they all went down, the estimates went down, but the stock went up. It's so rare you see that. The market essentially gave Amazon a 4-year pass to invest in what now has become next day delivery, Alexa. And nobody knew about Alexa when they entered this investment cycle 5-6 years ago. They've turned out at least 2 huge hits from that cycle. So I actually think market's been much more patient. It wasn't in the past. I think in that 2003 to 2006 cycle, the stock got crushed. People didn't believe in Amazon and in Bezos. But now that he's gone through 2 with the company, I don't mean to personalize this too much, the company has gone through 2 or 3 major investment cycles. The Wall Street, I think investors, have been willing to give this company, after they've proven themselves a couple of times, enormous amount of credibility. So you'll have a little bit of blips here or there. We had a gross margin problem in the 4th quarter of last year. The stock came off a little bit. I remember you asked him at your conference 2 years ago specifically, aren't you worried about this 25% correction in the stock price? And to his immense credit, he said, I was running this company, it was in a $6 stock. This isn't a huge correction in the stock. And they've kept that long-term vision and they've been able to work through it. And I think for the most part, 4 out of 5 years, so not all the time, but 4 out of 5 years, investors have been willing to stick with them.
And Amazon, for the life of the company, has been one of the most controversial stocks. You still have a camp of people, fewer than there used to be, who hate it, continue to predict it will go out bankrupt, or it's just a bookstore, how could it have this? The constant refrain over the years from those folks is, but it doesn't make any money, there's no profit. Why don't investors care about that? Other investors who've taken the stock to $800 a share? If you now start looking at it, the advantage that Amazon has, as you know just as well as I do, is that this mix shift from retail to AWS, this cloud business is now about 10% of the revenue. It's growing 3 times faster than the core retail business. It's 6 times more profitable, 25%. 24% operating margins versus 4% operating margins in the core retail business. It's now half of the cash flow, and it almost guarantees that margins for the company as a whole, because of this revenue mix shift to higher margin business, are going to be rising for the next 5 years. It's the best revenue mix shift story in technology. And what it means in terms of from a numbers perspective is this company is actually going to be generating about $20 billion in cash flow next year, or EBITDA next year. So it actually trades at like a high teens EBITDA multiple, which is kind of what Walmart did during its heyday. So I think that actually the market's actually been smarter than I thought, smarter than me, in realizing the cash flow potential of the company. And you're really getting real cash flows that come out of this business. And every once in a while they're going to depress these, and the market has to decide, are they going up against large enough TAMs to justify the investment? So I try to just lay out 6 or 7 potential big TAM areas they could go into. I think the market here's Amazon now investing aggressively in India, groceries, and then maybe in the video, and realizes those are big TAMs, and given their track record, I should be willing to allow them to cycle through investment cycles that are focused on those 3 TAMs. So I would argue that what Amazon is doing is in fact what we should wish that all of our big innovative companies did, which is they take their profit and they reinvest it immediately in other big opportunities. And again, you've got a small group that's always been whining about, hey, there are no profits, there are no profits. But in fact, what they're doing is they're saying, look, we've got all these great ideas. It's better than just piling up a mountain of cash like all these other companies we can't do anything with other than buy back our own stock. So we would be thrilled as an economy if more companies did this. Why are more CEOs going beyond Amazon? Why are they so wimpy? Why don't they do this? Why don't they point to Amazon and say, you shareholders, you keep sitting here whining about my ROI is supposed to be X and my earnings are supposed to go up by this and the estimates and all that stuff. And just say, you know what? We want to run a business. We want to create amazing products for customers. And if you're worried about that, look over there at Amazon. See that stock at $800 a share and no profit forever? That's what we want to be.
That's a great pitch. People should be listening to you on that. I think you're absolutely right. From we're going through a phase, unfortunately, where it seems like we're emphasizing more as a country infrastructure rather than innovation. May have kind of me, that seemed to be from a business perspective, what the results of the election were. I prefer innovation as a way to long-term grow the business. Code over cement. How's that? That's a good line. I like that. Okay. Code over cement. Anyway, there are a couple of companies I think are, I should forward on all the hate calls I get on Netflix. There's a company that has got a very good long-term, and they've proven the business model in the US and now they're trying to prove it internationally and they're generating almost no profits and those hate calls come in. But I think he's thinking just like, I think Reed Hastings says, a long-term visionary, long-term executor, just almost as good as the Amazon management team. So there are some companies that are doing that, but you're right, not enough are. But in all fairness, you have to earn this stuff. Amazon stock got crushed because they didn't, you had to make a big bet buying it at the IPO that they were going to be able to execute this well and be lucky and stumble across these things like Amazon Web Services. It probably wasn't a rational bet. Over time it became rational, but it probably wasn't a rational bet. Hopefully enough entrepreneurs see these examples and listen to you, Henry, and realize that that is a good way to run a business, but hopefully the people who are thinking that actually know how to run a business.
And one other piece to that is during Amazon's crash period, which sucked, as they almost always do when stock prices go down very rapidly. A lot of people are saying, oh my God, this guy Bezos, get rid of him. He's an idiot. He's a visionary, crazy person. We need an operator to come in here and fix this thing. And that's the way most American companies work. It's like the CEO has one mistake that knocks the stock and they're gone and they'll be fine. They get another great CEO job. But very hard to take a stand and say, you know what, we're going to do what Facebook also does this. We're taking the margins down. Your earnings are going down next year because we're going to invest. How do you, as analysts, persuade more companies to invest for the long haul, which is what this really is about? It's just ignoring the short term for the long term.
Well, they should listen to you more than me on this, and I try not to give advice to companies so much, but to the people who are investing in companies. It all depends on how good the management team is. There can only be so many good management teams. We've looked at how many, 300 internet companies over time, and I don't know, 2 dozen had pretty good, very good management teams, and half dozen had outstanding management teams. So I think a lot of it is depending on who's really running the company. I guess as I think back, I've looked at followed internet stocks and technology stocks on Wall Street for 20 years, and it usually always comes back to just how good the entrepreneurs are and whether the entrepreneurs have managerial skills, and that can be very different skill sets. You can come up with a great idea, but whether you can execute on it, I think it's rare to find people who can do both of those. You don't have to. If you have the right people around the founder who can execute, then maybe that's what's working well at Facebook. That's probably what worked really well at Google, and we'll see whether that works really well at Snapchat.
And coming back to Amazon to finish it up, what about the Jeff Bezos risk? He has actually proven himself to be brilliant, visionary, incredibly gifted company operator, continues to say things like that amazing quote you had about, yes, people always have this analogy, you either hit a home run or you strike out, and yet he adds to it the reality, which is AWS, which seemed like a crazy idea at the time, was a 1,000-run home run. In hindsight, utterly worth taking that risk, and so forth. So what happens if something happens to Jeff Bezos? What happens to Amazon?
By the way, you reminded me, I wrote one of the first notes on the street about AWS when they first announced it 8 years ago, and I think I wrote that I thought it was a really dumb idea.
It looked dumb. That's the thing. It looked crazy. What are they doing? They don't have a real business, so they have to do this other crazy business?
There is, but Henry, to your point, there is, I guess, a key person risk, and you do have this with a few other companies. Hopefully, they built up enough consistency and that dozen or 2 dozen direct reports that are good enough to continue with the business after the founder inevitably moves on. Hopefully, they've set themselves up. I loved earlier today when we were talking about Facebook. Zuckerberg, to his immense credit, on most earnings calls, talks about the 3, the 5, and the 10-year plan. Damn, that's refreshing, and I love to see that. And as more companies do that, that's great. Bezos, I think, has always done that. Maybe not as explicitly as Zuckerberg has done, but he's always done that. And so, yeah, I'm sure that's a risk. I'm sure Amazon stock will trade off, and any negative news about Jeff Bezos or that he flies off into space and doesn't come back. But hopefully we won't have that.
No, and I have to say, I asked him that question once. I was like, what happens? And he had his hooting laugh, of course, as you would imagine. And he said, nothing would happen because the 16 people that you're referring to, we have been together for 15 years. Basically, the company wouldn't even notice. Like, these principles are so ingrained in the company now. Now, I don't believe that, but an interesting thing. And he says he does have a successor, which is nice. We just don't know who it is. Mark, thank you so much.
Thank you,
Great
Henry.
to have you.
Mark and Henry, it seems like you all know what time it is now. It's lunchtime. I can hear your stomachs rumbling. But make sure, if you were interested in the Ford presentation earlier, there's going to be a deep dive into Cheryl's session over in the Tower Room, where we're going to look into some of the topics she was talking about in more detail. But whatever you do, make sure you're back in this room for 2:20 p.m. We've got a great afternoon session coming up, so don't miss it. Thank you.
This can't be the last time that I see you. It can't be true.
Ladies and gentlemen, our program is about to begin. Please take your seats. Ladies and gentlemen, please welcome Business Insider Senior Correspondent Steve Kovac.
Welcome back from lunch. We're going to kick off the afternoon session with some really cool stuff. We're going to be talking about virtual reality. I have a panel of experts who are going to help me dive into what works in this new medium. But first, we're going to have Ted Schilowitz from 20th Century Fox do a quick presentation, and then we're going to dive in and talk about it. So come on out, Ted, and the rest of the panel. Thanks.
Hi, everyone. Welcome to Post Lunch. My name's Ted. I am also, interestingly enough, a futurist at a movie studio, at a big movie studio, 20th Century Fox. And I was thinking before when Cheryl was up here talking that I've never been at a conference with two futurists at the same time, and I was wondering if we cancel each other out, and then there's no future for any of us. This is what I was thinking, but let's hopefully not. So I'm going to talk to you about some interesting things. First, I want to bring this up. Both you would hear me, and you'd also hear Cheryl from Ford say that we are probably not really real futurists. We're more like futurists in training. Hi, everybody. He's a real futurist. If you want to do a little research on him and see what he's up to, he's an interesting guy. Before we get started with my little talk, we're going to try a little sort of futurist experiment. So I'm going to make a prediction that every one of you here, 100% saturation, has some sort of micro, very powerful computer/robotic assistant in your pocket or on your person. You often call it a smartphone. Do you have one of those with you? If you do, take it out and hold it up. We're going to try a very quick little experiment here. Are we at 100%? Okay. Keep them, hold them up high. Swap them with your neighbor. I'm going to give you mine. You give me yours. So whoever's got one up here, swap one. Nobody brought theirs with them. Okay. So now you've swapped with your neighbor. Put that new phone in your pocket or your purse. Just try it for a second. I'm going to put mine over here. I've done this with audiences of thousands of people and small audiences. The reaction is always sort of the same. There's a chuckle, and then there's a little bit of an uncomfortable sort of moment. Now, think to yourself what's going on in your brain and your mind right now. I haven't just taken your phone away. I've taken something more important than that away from you for a little while, right? Everybody feels a little odd, yes? See how long you can hold out. This is your challenge. Just remember to give them back or there'll be a crisis at the end of the day, okay? Just see how long you can hold out. So here's what we're going to talk about. We're going to talk a little about human nature and what I think about all day long. You're already trading? You guys can't even handle it for 5 seconds, right? Now that's an interesting comment on society and what we're going to talk about here. So let's imagine that one of us or some of us went to jail tonight for some strange reason. Okay, imagine that. If you didn't have your phone with you, they took it away when they incarcerated you, who would you be able to actually call without your little robotic friend? Maybe you could call your parents' phone from when you grew up. Maybe you know one other phone number. But beyond that, your robot has taken over, right? You have given up control. When was the up control? Which leads me to this quote, which I think is really interesting. He's a